personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. Seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it.
WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s when everyone had a nickname. His was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollars trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. Amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddies, son, or they're his own kids' friends from football. You know, they're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but it's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside. Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day. But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped. So this is going very well for them. They are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory. And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible. So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had has kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, And, you know, in the most extreme cases, there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. You know, one obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That, you know, they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2,
if you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that the carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in the story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system. And you end up in sort of a race to the bottom. And that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
The Hyperloop. there's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes. It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so. And came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was like, is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. And take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. And I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe.
On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone from Superwell, from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $79 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop
using
burying money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, you know, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world.
Yes, that's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the projects. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Some concern today, not only about the path of economic growth, but the uncertainty on the outlook for inflation. We have lower equity prices right now, with the Dow Industrial Average off about 0.3%, the S&P down 0.5%, and the NASDAQ Composite weaker by about 0.8%. 2 p.m. on Wall Street, I'm Doug Krisner at Bloomberg World Headquarters in New York. We also learned today from the Fed that U.S. household net worth fell by more than $500 billion in Q1. That was fueled by nearly a $3 trillion decline in stock holdings. So the question is now, is there more to come? Well, the answer may depend on inflation. Tomorrow we're going to get the number on consumer retail inflation for the month of May. We're expecting CPI to rise at a rate of 8.2% from last year. As hot as that reading would be, some are saying we're very near peak inflation, but Bloomberg contributor Mohammed El-Arian says it's really premature to make that call.
The drivers of inflation are broadening, and that's due to the Fed policy mistake. Secondly, at the headline level, energy prices are going up month on month quite dramatically. And thirdly, we're seeing pressure on shelter and food. So if you look at all the components, it's way too early, unfortunately, to say that inflation has peaked.
That is Mohammed El-Arian. We have a 10-year Treasury now yielding 3.03%. State Street says it will not pursue any deal with Credit Suisse. Yesterday, a Swiss financial blog was saying that State Street could buy Credit Suisse. State Street right now better by 0.5%. ADRs in Credit Suisse weaker by about 0.6%. And Disney has fired Peter Rice as its most senior TV content executive. Disney shares off more than 2% right now. We've got the NASDAQ Composite down about 0.8%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I said yeah, because they're playing air guitar in the studio.
Yeah, it's one of those days we're rocking out.
We totally are. I saw you playing your drums, your air drums over there.
It's the only type of drums I know how to play.
It's what we do on a Friday's Eve. It is also known as Thursday, June 9th, 2022. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Broker Studio, streaming on YouTube. Not rocking it out. Stocks, again, unless you're short this market.
Yeah, down for a second day in a row. It's all about those global growth concerns. Doug Krisner mentioned them at the top there. Yeah. That's on our mind. The ECB, of course, weighing in earlier today. But, Carol, we've got the same worries here in the U.S.
Oh, my God. Absolutely. So we've also got, with that in mind, another day when we want to bring you some of the most read on the Bloomberg. Top of that list, and what Tim was talking about, how inflation is topping 10% on key items that we all just can't avoid.
This story has your name written all over it because you've been talking about this. Who cares about core versus non-core, right?
I don't live just a core life,
You
right?
don't. None of us do. Another one that we're keeping an eye on, the ex-BlackRock rising star who has no regrets about leaving Wall Street.
Bye-bye. And then we've got the story that is the most read, the Bloomberg Big Take. It's the cover of the new issue of Bloomberg Business Week. And whoa, the cover image alone, you will love. You have to check it online. It's also kind of interactive. We're going to tell you about Oracle's Larry Ellison being dubbed the Lord of Lanai for all the wrong reasons.
Yeah, this is a really good one. Plus a detail about Tom Cruise in there that you do not want to miss. Plug Power's CEO on bringing hydrogen to Europe. And also we're talking about a new book, Good Arguments. How debate teaches us to listen and be heard. A really important one for right now.
Washington, are you listening?
They're not.
No, they are not, but they should be. All right, let's get to the Market Drivers Report. Let's set your Business Week agenda on this Friday's Eve. We are so delighted. One night only. All access to Vince Signorella, global macro strategist at Bloomberg News. He contributes to the Macro Squawk Desk, which is a real-time curated news audio stream directly through the Bloomberg terminal. Check it out at Squawk, S-Q-U-A, go, on your launchpad. Hey, Vince Signorella, how are you?
I'm okay. Can you play an air harmonica, or is that an oxymoron?
Do you know that air guitar, there's like a real championship for air guitar? I got a friend who's like an air guitar champion. He would compete all around the country. I'm not joking.
There is an expertise to playing air guitar. I don't know about air harmonica.
I can't play air guitar or real guitar.
I can't sing, but I surely do try. All right, Vince Signorella, the market's trying to do something, but I just don't know what.
Yeah, today I'm speaking to traders, and basically what they're telling me, this is all algo-driven. They're really sitting on their hands ahead of inflation data tomorrow and ahead of, fingers crossed, hoping desperately for some clarity from Powell after the FOMC rate decision next Wednesday. The story for tomorrow with CPI is even a good CPI probably isn't going to tilt the scales too much into the positive territory long term because of Powell next Wednesday. But a miss with higher inflation is going to wreck the market tomorrow. So that's kind of what we should be looking for in the next.
Wait, did you say we are going to get a miss? You mean a higher print?
If we get a miss.
No.
Oh, if.
I said if.
Okay.
If.
I mean, how much of a miss, though, Vince? Does it have to be like 1/10 of 1%?
Well, that's the kind of world
that I'm watching. The one that I'm watching is not the year over year because I think we're comparing that to closer to pandemic situations.
Interesting.
Good point.
But the month over month, which is expected to rise to 0.7% from 0.3%. If that approaches anywhere near 1%, that's going to scare the heck out of the markets. If you get a dip and you come in at around 0.5 or amazingly matching the prior at 0.3, you start to get that conversation where inflation may be rounding out and more people will start to maybe fall into that camp. Right now it's a very binary trade. I mean, there's one camp who thinks the Fed is going to do the Bullard approach, which is to keep hiking until you get to 3%. The other side of the coin are the ones in the daily camp who think, June and July, 50 basis points, September, possibly a pause because they want to see where the data brings. So whoever Powell leans toward in that conversation is which way the markets are going to go. They're either going, and they're going to go hard and fast.
How do you think? Go ahead.
Sure,
I'm sorry.
go ahead.
No, finish,
I was
please.
just going to say once this market does finally find direction, and it's been directionless. I mean, even though we're lower, the conviction is not as bearish as people may think, because there's still a fair amount of people positive on the market. Once that conviction is confirmed, this market's going to go a long way. It's either going to tank precipitously or it's going to surge because of all the selling we've had.
I totally agree with you. This is why I love having you on. I feel like you and I are mind meld. Having said that, trend lines are important. I keep kind of hammering it. And how do you think about trend lines, right? Because are we in an environment where inflation could bounce around, where we get a softer print and then a harder print? Or do you, like you just said, the markets are going to react probably one way or another very strongly. If inflation indeed will start to come down, it will start to come down. It will be very clear. Or do you think it's going to be muddy for a while or continue to be?
I think, unfortunately, it's going to be muddy for a little bit. The difficult situation, and this is something I keep harping on because I disagree with almost everyone in the market on this, is disinflation has actually been caused by the huge amount of stimulus that's been put into the market and the lack of supply. So you have all this money chasing a limited supply. And monetary policy, and I'll send you the story when it's published, it's kind of like trying to kill a mosquito with a hammer on your countertop. It ends up doing more damage than it helps. I mean, this is not the Fed's problem. It's a fiscal problem. But certainly in an election year, you're never going to get anyone raising taxes. And there's still a lot of excess money out there, although it's starting to go down. The savings rate is declining, but there's still enough out there to keep this imbalance going. And it's going to stay muddy until we find a balance.
So in other words, the mosquito loses its life, but man, your countertop is
Vince, I hope
ruined.
you didn't try this out before you writing the story and using that metaphor, right?
I'm a guy when I go after flies and mosquitoes.
Good. Hey, before we let you go, let's talk growth concerns specifically, because that's what, I mean, even though you said the market's algo-driven this afternoon, talk to us about where you're seeing growth concerns.
If I think about it, it's probably in manufacturing, but it's not a bad thing. Because we're seeing service sector pick up, and what people had always been talking about is when we wanted to see this economy finally get its groove, is when we moved away from the pandemic surge of manufacturing, where people were staying home and bringing goods into their home via the internet, and now going back out again and increasing spending on services. So I think it's a good thing, but you definitely should probably continue to see a growth decline in manufacturing.
I can't get that image out of my head. Killing a mosquito with a hammer.
Crash, crunch.
Totally makes sense.
You don't hit the mosquito, you hit the counter.
No, I know. A lot of damage. Vince Signorella, thank you. He is global macro strategist at Bloomberg News, on the phone from White Plains, New York.
Let's get to Washington, D.C. now for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The first hearing into the January 6th attack on the U.S. Capitol is set to air tonight on primetime television. The committee looking into what happened plans to share what it has uncovered about then-President Donald Trump's efforts to overturn the results of the 2020 election. Greg Valliere, chief political analyst for AGF Securities, says Trump supporters are likely on edge.
Kevin McCarthy and a lot of Republicans have to worry about the quality and quantity of the witnesses over the whole month of June. People like Ivanka Trump, Jared Kushner. I think a lot of people have stories to tell.
Greg Valliere says the key is how credible some of these witnesses will be. This all begins at 8 p.m. Wall Street time. Well, while all eyes are on Capitol Hill ahead of tonight's hearing, President Biden is in California for the Summit of the Americas.
The rainforest and democracy topped the agenda for the Biden-Bolsonaro sideline meeting. Brazil's leader, Jair Bolsonaro, is a combative right-wing populist who aligned himself with former President Trump, and he and President Biden have not met nor spoken on the phone since Biden took office. Both U.S. and Brazilian officials say climate, the rainforest, and democratic institutions will come up in the meeting, which Bolsonaro teed up by expressing his doubt about Biden's election victory. In Washington, I'm Amy Morris, Bloomberg Radio.
FDA approval is expected on plans to administer a COVID-19 vaccine to ages 5 and under, but the White House is not waiting. It's already outlining its rollout plans for the vaccine. The Biden administration says 10 million doses will be available largely through pediatricians. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube. So safe to say our kids just cannot catch a break between the pandemic and being schooled at home for a long time, missing out on all-important socialization for months at a time, and then the chronic shootings in schools and society where kids often end up being the target. It has been a world full of stress for our younger citizens.
We did hear the House of Representatives yesterday passing a sweeping gun reform law, but it seems like it's not going to get past the Senate. Let's get into it and specifically what it means for our nation's youth. Joining us is Dr. Tamar Mendelsohn, Director of the Center for Adolescent Health at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health that is supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Mendelsohn, we wanted you on the program today because you're an expert in adolescent mental health, child psychology, and you can really give us an overview on what our nation's kids go through, not just if they would experience a horrific event like this, but just preparing for events like this. When I was in school, we weren't doing drills for active shooters. Carol, I know it wasn't happening when you were. Columbine happened my freshman year of high school, and I feel that was a sort of a changing moment. How do we need to think about this in the context of mental health?
Yeah, so thank you for having me. It's a pleasure to be with you today. And yes, you're absolutely right that these kinds of events have, sort of acute and then ongoing impacts for young people. And of course, the young people who are most affected are either at a school where a shooting has happened or, in the community in some way. But even young people who may live far away are going to hear about these events through the media. And like you're saying, they may also be experiencing drills or other change procedures in their school. So I think it's important for parents to understand that this might raise, anxieties and concerns for young people.
So how do we approach this? And I feel like I remember my sister who has 3 girls who are now in their 20s, but they were younger. And when there were things in the news, whether it was during various administrations and headlines and, kids either didn't expose them to news at all because you just didn't know when things were going to pop up that were questionable. So how do we as a society, as parents, as caregivers, do the right thing here? And you know what?
Yeah.
Forgive me. I think I need to break in. Forgive me. The president is speaking at the Summit of the Americas in Los Angeles, and we do want to take our audience there. This is in Los Angeles, a gathering intended to deepen the ties between the U.S. and Western Hemisphere countries. So let's head to President Biden at the Summit of the Americas.
Every time I walk in the road, he stands up. I think there may be a fire or something. Press, that was a joke. That was a joke. Well, it's wonderful to be with you this morning. I really mean it. I want to thank the Chamber of Congress for bringing together this group of business leaders from all across the region. And all of us here in Los Angeles for a simple reason, because we believe in the incredible economic potential of the Americas. I know I do. We all do. I mean, I just think the potential is unlimited. The region is filled with dynamic energy, entrepreneurs who are ready to break out, innovators who will change the way we think and the way we do things, young people poised to seize the future. Everybody, the press always asks me, why am I so optimistic with the way things are? Take a look at all these young folks. They're the best educated, they're the most generous, they're the people who have done the most, they're ready to volunteer, and they're the least prejudiced folks in the world. It's a new generation, and this an underpinning gives me an enormous sense of, and I mean this sincerely, an enormous sense of optimism. We have everything we need right here in the Western Hemisphere, not only to point ourselves toward a future that is more prosperous, secure, and democratic, but the ability to achieve it as well. And for all of you are essential to making sure we get to this place we have to get to. You know, the private sector is able to move quickly, to mobilize vast amounts of investment capital, as are going to be needed to unlock the enormous potential for growth in this hemisphere, in the region. And when we combine the ability of government to direct economic activity towards specific challenges, to help mitigate risk, guard against unfair practices, and create predictable demand, with the agility of the private sector, I believe we can deliver real improvement for people's lives. I really believe it. You know, just my wife often reminds me that I had a doctor who a long time ago who was saying when I had an aneurysm, he kept saying, is it congenital or is it environmental? And I said, I don't care. I just get it done. He said, you know what your problem is, Senator? I said, no. He said, you're a congenital optimist. But I am. I'm an American. That's why I'm a congenital optimist. So look.
All right, you've been listening to President Biden just beginning opening comments at the Summit of the Americas at the Intercontinental Hotel in L.A. That summit, just a gathering intended to deepen ties between the U.S. and Western Hemisphere countries. It did draw some criticism from Beijing, which seeks to make its own inroads in the region, so there's a lot going on. We will continue to monitor that event and bring you any relevant market or business-related comments, certainly to your attention. In the meantime, we want to get back to our guest.
Yeah, Dr. Mendelsohn is the director of the Center for Adolescent Health, Dr. Tamar Mendelsohn at Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health that is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Mendelsohn, before we went to the president, you were talking about specifically what's happening in schools these days, not necessarily the drills that students have to do to prepare, and also what they're seeing in the media when it comes to school shootings and violence. Please go ahead.
Yeah, thank you so much. So we were talking a bit about, what parents can do and how they can approach these issues with their children. And I think it's really important to sort of know your child as well as to be thinking about their age and their developmental stage. So, for very young children, you may decide you want to turn the news off and you may want to sort of create space around this. For children who are going to be hearing about this at school or through friends, I think it's really important to create space for your child to talk about what they've heard, what they're feeling, and what their questions are. Sometimes kids have misperceptions or fears about events that parents can really help to talk through. It's also important for parents to work through their own emotions before talking with children so that we can really be focused on what our children's needs are. And I think the more that we can provide basic information that is in line with how old our kids are and kind of what they're ready to hear, that can be really helpful for young people.
Well, and I do think about, we always talk about in our world, in our realm, about public-private partnerships. And I do think about, mental well-being, wellness. I do feel like we took a major step forward during the pandemic and coming off of George Floyd. I mean, there were just a lot of very strong conversations and understandings being felt and made. But I also do think that we need to still continue to move forward on this and think about the role of schools maybe in all of this, and making sure that there are environments where kids who are struggling get the support at home, but maybe also at these educational institutions.
I agree with that. I think schools are a really important resource for our young people's mental health. So teachers can also help to create space to have sort of safe, age-appropriate conversations about current events. And also schools are spaces where young people who have emerging mental health needs can hopefully be identified and can be provided with the supports that they need. And that might come from a school mental health specialist, or it might come from referrals for outside sources. But I think schools are often really important gateways for connecting children with services that they need.
I'm just trying to understand the differences between what's happening now and what's happened, since Columbine and what happened before that. And I'm trying to figure out, as we look for answers in a really difficult time, I think, for a lot of people, what is it about America that makes us unique when it comes to these types of mass shootings in the developed countries, I should say?
Yeah, so I think a common misperception right now is that mental health issues cause mass shootings. And I think what's true is that guns cause mass shootings. And so, gun policy is going to be critical for resolving this problem in our country. Mental health care is incredibly important and does need more attention, but that's not the answer to reducing mass shootings.
So what would be the answer to reducing mass shootings?
So I think gun control policies are really critical. I mean, one of the things that differentiates our country from others is the policies that we have around gun ownership, access to guns, and so forth. And so I think that's a really important area. And in fact, there are experts at the Bloomberg School who study those policies specifically and can really speak well to what's needed in this area.
How do you know when it's a crisis moment, Dr. Mendelson, and it's not a case of just having a conversation and that there's something more that needs to be done?
Yeah, so I mean, I think that one thing for parents to watch for is always shifts in children's behavior. So if you're noticing something really different, your child is suddenly withdrawing from things they used to enjoy or having very different behavior, seeming distressed in a different kind of way, that's something to pay attention to. And I think having open communication with children is always really important so that they do feel comfortable opening up when you ask them about what's going on. And that's another thing, too, is to ask. Don't assume that children will broach the topic, but if you make it a safe space to be able to say when something is bothering them, and that's sort of ongoing in your family culture, it makes it easier when crises do arise.
Dr. Mendelson, I'm wondering, as a parent, and people who listen to the show regularly know that I have a 3-year-old, and, I'd sometimes talk with my wife, how do we know if he's acting like a normal 3-year-old versus something that we should have an eye on as relatively new parents? What is the way to know that stuff without actually going to a doctor and speaking to somebody who is an expert in child behavior?
Yeah, that's a great question. I do think there's lots of great online resources through the American Academy of Pediatrics and other sort of respected sources of information on child development. There are also great books out there. But again, when in real doubt, it is helpful to talk to a pediatrician directly or a child mental health specialist.
It's, unfortunately, we are living in a society where I think most would say more of this is going to come and there's going to be more stress on our younger population. Is it ever too young to start having these conversations?
Again, I think that as long as conversations are developmentally appropriate, so for instance, for younger kids, often fewer details are better, keeping things more concrete and simple. I think if conversations are developmentally appropriate and do not overwhelm children unnecessarily with information that makes them feel sort of paralyzed and afraid, then I think it's really healthy. And in fact, crises or events that happen in the world can be opportunities to talk to children about how we can have positive impact on the world and how we can identify what our values are and work to change problems that come up in the world. And that can be a way of helping empower young people to think about how they can take action.
Dr. Mendelson, before we leave and wrap up, we did want to get to that there was an act that passed in Baltimore, and I think it's very relevant to this conversation. Can you just fill us in on that?
Absolutely. So Baltimore passed the Elijah Cummings Healing City Act to really address the widespread historical trauma and collective trauma in Baltimore due to the effects of structural racism and sort of historic wrongs that have been done. And this initiative, this is the only citywide legislation passed to really create a trauma-informed, trauma-responsive city. So it's a really exciting opportunity. And there's a task force to help oversee how this legislation really gets enacted. But more importantly, there's real engagement with community. The idea is to have a community movement that can really promote healing in Baltimore. And hopefully this will be a model for other cities. I think it's important to note that while, the school shootings have been devastating, that many communities, such as those in Baltimore, have experienced violence in an ongoing way.
Dr. Tamar Mendelson, Director of the Center for Adolescent Health at the Johns Hopkins Bloomberg School of Public Health. We should know Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent of Bloomberg Radio, is a donor to groups that support gun control, including...
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, looking at the most read on the Bloomberg in the past 8 hours. I love this function. As you know, I'm obsessed with it. This is our 6th most read story on the Bloomberg today.
Read go. Read go.
Yeah.
Do you say read go or read?
Most read?
Yeah, most read go.
Most read go?
Yeah,
Read
that's
go?
what it is. All right, let's settle this argument. We're going to go now
Tomato.
to Doug Krisner, who's standing by with an update on the markets. Hey
Most
there, Doug.
read, most read. What do you do, Doug?
You guys are funny. So today, the outlooks for economic growth and inflation are very much in focus. And I think it's fair to say it gets really tricky when you try to assess the impact and the path of Fed tightening. Today, we're hearing words thrown around like inflation, recession, stagflation. Today, the Dow Industrial Average is near the worst level of the day. We're down about 0.6%. S&P 500 off about 0.8%, and the NASDAQ comp down 1.1%. Disney shares are moving lower. The company has fired Peter Rice, its most senior TV content executive. Disney shares right now are off more than 2.5%. Tesla reported a doubling in month-over-month deliveries of cars made in China. Tesla shares today bucking this overall downtrend. Stock is up about 1.2%. And Meta Platforms, the parent of Facebook, began trading today under its new ticker, MEET. The new ticker aside, the question remains, can Meta deliver on the metaverse? Stock is down about 3.7% right now. We're seeing yields across the U.S. curve move up, a 10-year Treasury at 3.03%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Doug, you're hanging out in the metaverse, aren't you?
I am indeed.
We're there now. Who knew? All right, Doug Krisner, thank you so much. Well, for some leaving Wall Street for the freewheeling world of DeFi, it would be, a little bit scary, but not so for a former BlackRock rising star.
Yeah, we're talking about Mary Catherine Lader, this profile by Olga Karif, crypto reporter for Bloomberg News, among the most read on the Bloomberg terminal today. Olga joining us on the phone from Portland, Oregon. Olga, tell us about Mary Catherine Lader, because she was a real rising star on, when it comes to what is referred to as TradFi, traditional finance.
Absolutely. So it was a big shock to everybody when she left BlackRock about a year ago to join Uniswap as its chief operating officer. And Uniswap, of course, is really well known in kind of a niche of crypto called decentralized finance. It's the world's biggest decentralized exchange protocol, but it's still, compared with BlackRock, a very sort of minor player, but the one that Mary Catherine later known as MC really believes has got a bright future.
So, okay, I mean, it's still a big step, right, to go from kind of a very known entity to not. What's her thinking about, this is, I think, part of our world, and I throw like a Kathy Wood in this and some others, like thinking about the future and how things are going. Those who believe in crypto and blockchain, right? Things are changing. What's her conviction behind her move?
I think she believes that DeFi will be as revolutionary to finance as we know it as, the internet was to commerce and lots of other industries. And so something that's small today could be huge, in just a few years. So she believes that decentralized finance that essentially gets rid of intermediaries like banks to allow additional efficiencies, potentially lower cost, faster transaction times. She believes that this will, eventually, this is the future of finance as we know it.
But I'm wondering what she is able to accomplish there versus by staying at one of the traditional finance firms and, in fact, co-leading the company's charge into DeFi.
Her plan is she wants to basically today Uniswap is niche. It's mostly used by crypto traders who really know what they're doing. mostly a lot of them are individual crypto traders. What she wants is to bring Wall Street into DeFi and to bring mainstream consumers into using decentralized exchanges. So it's a very big vision and one that she is trying to accomplish through adding new features. She's hiring a lot of people from some well-known companies, and she really believes in this mission.
What do you I think about a story like this, and I said it is among our most read on the Bloomberg on this Thursday, has been there all day. I do think about, as we continue to increasingly highlight individuals in this space and talk about what's going on, what do you think our audience needs to keep kind of front and center about an individual like her, or just generally what's going on?
In general, I feel like we are in such an interesting moment right now where, a big crypto project called Terra just collapsed. There is a lot of regulatory scrutiny. Crypto prices are down, and yet, it's good to keep in mind something that, somebody like MC is. Still believes in DeFi, still believes in crypto, and is going sort of full speed ahead here. So, it's a very cyclical industry, and but there are lots of serious people who really believe in its future.
What's the future of Uniswap? How does it become a product that's not niche?
Basically, it needs to add additional features and a safety net, basically, to attract both Wall Street and mainstream consumers. Right now, decentralized finance is largely unregulated. There are lots of scams. There are lots of ways and opportunities to lose your money. And, there has to be more, maybe regulation. There has to be more hand-holding. And that's something that Uniswap is seriously looking at, providing more safety features so that more people and institutions would feel comfortable using this products and stepping into this world.
I mean, has her view changed at all? And mind you, she's going to be talking her book because of what she's doing today, but she left last June. The environment, though, is very different. Here we are 1 year later. Has anything changed, anything more nuanced in terms of her thinking about this prospect, or how long it might take for it to really take off?
So obviously we just had the Terra collapse, and that basically ended up losing investors many tens of billions of dollars in market value. And so that was definitely a shock for the system. But what MC is thinking is that, perhaps this will hasten regulators to do something about overseeing this space. And good for DeFi because it needs to be, once it's more regulated, once there is more of a safety net, this will attract more users.
Yeah, interesting. That's a good take on it and a smart one. Olga, thank you. Olga Kharif, crypto reporter at Bloomberg News, on the phone from Portland, as we said, among our most read on the Bloomberg today.
From Portland to Washington, D.C. we go for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. House Majority Leader Steny Hoyer says he hopes tonight's hearing into the January 6th attack on the U.S. Capitol will be a learning exercise for Americans.
I hope the American people take away from these hearings a sense that they need to protect our democracy and our Constitution by not allowing this kind of thing to happen ever again.
Congressman Hoyer of Maryland says the hearings will also help answer many questions, including what happened, why it happened, and who was involved. He says he has no doubt former President Trump was responsible for the events of that day. A Republican candidate for Michigan Governor Ryan Kelly has been arrested and charged in connection with January 6th. The FBI says Kelly was arrested earlier today in western Michigan. The House last night passed a series of gun control bills and is still considering a measure that could pass the Senate on keeping weapons away from dangerous individuals. Bloomberg's Irv Chapman reports.
The bill was sponsored by Representative Lucy McBath, the mother of a murder victim.
We need policies that will give our law enforcement the tools they have asked for to help keep guns out of the hands of those who are a danger to themselves or to others.
Republican Debbie Lasko said the bill would allow a disgruntled ex-spouse to lodge a spiteful complaint.
Democrat bills want to take away my right to protect my grandchildren.
19 states and the District of Columbia, the Democrats said, have enacted laws that this bill would make nationwide. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube. And just wanted to get to a story that is taking a look at Manhattan apartments. The rents continuing to skyrocket last month, with the median hitting $4,000 for the first time on record. This is rent.
Yeah, this is rent.
This ain't no mortgage, baby.
That's bigger than mortgage payments in most parts of the country.
Yeah.
So rates on new leases jumping 25% from a year earlier to reach that benchmark dollar figure. It's an all-time high in 3 decades of data keeping by the appraiser Miller Samuel Inc. and the brokerage Douglas Elliman Real Estate.
I thought everybody was leaving New York City.
I was just going to say
what
that.
happened? Look at
if we were doing
bounce
this
back.
2 years ago, if we were talking about this, and that's the main difference here, Carol, is that 2 years, even January of last year.
Yeah.
You know, Mr. Laney Gaffapoulou, I remember she came on Quick Take to talk about the great deal that she got on this incredible apartment because landlords were basically begging her to sign leases at that point. Talked to some friends over the weekend who their apartment building is being sold by the landlord,
Yeah.
so they have to find a new place. They're looking for a new place right now, and he said there are lines out the door to see open houses for rentals in parts of Brooklyn.
What is going on?
I don't know. I was thinking today, that is a story I would read.
What are we missing?
Explain what changed in the last 2 years.
did all of us-
If the pandemic didn't happen, would we still be experiencing this
Right.
demand for housing around the country right now?
What is going on?
I don't know.
I don't know. Rents now have notched records in each of the past 4 months as New York came roaring back from the pandemic. The leasing market's busiest season, when new college graduates settle in to start jobs and families make plans before the oncoming school year, is just getting started. So with competition only expected to heat up, more rent increases and fresh records are likely. I don't understand this. We maybe have to get Jonathan
Miller on?
Yeah.
We should get him on. He's the president of Miller Samuel. Here's what he said in this story. Quote, historically, new lease signings have always peaked in August, which increases the chances that the additional demand will push prices up further. In other words, tenants could see more price pain through the summer.
You know, it's interesting, too. Units spending just 52 days on the market before getting scooped up last month, down from 68 days in April and 107 days a year earlier, which you were talking about where we were a year ago. Help. Tweet us. We want to understand why. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're preparing for the final hour of trading in today's session. The equity market right now very near the worst level of the day. The S&P 500 is down just about 0.9%. Of the 11 industry groups within the S&P, every one negative. Financials leading the way lower, down about 1.4% as a group. Kind of curious, too, because interest rates across the entire curve are moving up. That's normally a positive for the banks, but when you've got a lot of concern about the economic growth story going forward, it's not surprising that you're going to see banks under pressure. Disney has fired Peter Rice, its most senior TV content executive. We are told that Rice was seen as an ill fit with Disney's corporate culture. Shares right now in Disney are off about 2.5%. State Street saying today it is not pursuing any deal with Credit Suisse. We were talking about that story yesterday. State Street shares right now showing a little bit of weakness, and ADRs in Credit Suisse down by about 4% as well. NXP Semiconductor saying today demand is far in excess of supply for the company's automotive and industrial business, and NXP is not seeing any sign of weak consumer demand. Shares are up about 6% right now. Yesterday, you may recall, late in the day, we heard from Intel, the company saying that a weaker economy will affect demand and hurt its financial performance. Intel shares right now off about 1.4%. Dow Industrial Average down about 0.7%, and the NASDAQ comp today weaker by 1.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. First up, we want to get to the cover story and the Bloomberg Big Take. And might we add, the cover image alone is a must-see. The story is about Larry Ellison, the Oracle billionaire, you know him well, who is making his Hawaiian island more hospitable to the super rich, but pushing out families that have been there for generations.
Sophie Alexander had the enviable task of traveling to Lanai and spending some serious time in Hawaii. She's the author of this cover story for Bloomberg Business Week. She's wealth team reporter for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio. Joel Weber is the editor of Bloomberg Business Week. He joins us in the Interactive Broker Studio as well. Joel, I want to start with the Lord of Lanai, the cover of Bloomberg Business Week. You do each week tell us how the sausage is made when it comes to the cover, but this one is particularly poignant.
So it's a painting of Larry Ellison in a very, provocative kind of pose of him sort of as almost as a conquistador. And there's a very traditional Hawaiian vibe to the artwork, which is also reflected in the artwork that we commissioned for the story on the inside. But let's just say Larry Ellison did not want to participate in the story. So hence why you have to recruit an artist to make a painting. This one is a really interesting story though. And honestly, I knew nothing about this, although I have been to Hawaii, to the islands that look at Lanai, and you're like, whoa, what's that island? And Lanai is this amazing story in and of itself, because it's basically always been, as long as it's been, sort of developed and civilized in the, quote unquote modern terms, it has really, the ownership of that island has been in very few hands. It was forever a dole plantation. Another dole billionaire basically bought it, and then just a decade ago, it fell into Larry Ellison's hands. And for all the conversations that happen about Hawaii, and I think Mark Zuckerberg has gotten a ton of attention for what he's sort of cobbled together, nobody owns an island. Larry Ellison bought the whole thing. 98% of this island is his, and he can basically do with it whatever he wants. But that means the 3,000 locals who live there and they rent from him and basically own from him have found themselves in a really difficult position. So, Sophie, you went there, you talked to them. What are they experiencing?
Yeah, so it's interesting because they're used to their island being owned by a billionaire. There was a billionaire before Larry Ellison that owned it, David Murdoch. As you mentioned, he was the Dole chairman at the time he took it over, I believe. But he was what they now call a poor billionaire. He was worth like a couple $1 billion compared to Ellison's roughly $90 billion on any given day. It's just this amount of wealth is so unfathomable to pretty much anyone. And so they're seeing firsthand what he can actually do with it. So Ellison, he owns pretty much everything. He controls pretty much everything. And because of his massive fortune, he can really shape this island into what he he wants. The other billionaire, was letting the hotels run down, the community pool was running down. He just couldn't afford to keep it up, but it's not a problem for Ellison.
So what is Ellison doing? Is he investing? Is he propping everything up? And is he embracing the locals?
So it depends who you ask. There are some people who are really happy with what he's done. One person I talked to who is in the story, Gail Allen, she says, he bought the grocery store and he turned it into a mini Whole Foods, which, she's very happy about. And a lot of people would be very happy about. But, Whole Foods is like the marker of gentrification after all. And a lot of other people on the island are more anxious because the problem is no one really knows what Larry's plans are, and he is very, behind the scenes. The old billionaire who owned it, David Murdoch, he was very involved in the community. He talked to people in the community, but Larry does not engage with the community at all. He's never been into a community meeting. He basically let his company do the talking for him, and even the people who work there, one of the people I talked to said she has no idea what his plans are.
So you get that perspective, but you also get a perspective of people who are affiliated with him, right, and who have worked for him. And so there's this other side of the conversation, which is he can kind of do anything he wants, right? And so what has he done on that side? Because he has spent some money there.
Yes, he's spent a bunch of money. I mean, one of the first things he did, let's just start there, is build a Nobu on the island. He said at one point that when he arrived, the food was
That's for the masses, right?
Yeah, exactly. Well, there's actually the one Nobu, and then there's Sensei by Nobu. So there's actually...
That's for the masses. Sorry.
Exactly. It's like 2 Nobus on one small island. He renovated the Four Seasons hotels. He spent tens of millions of dollars on that. And so now rooms at the Oceanside one run thousands, even tens of thousands of dollars a night for some of the suites.
Jill, is that where she stayed when she was doing the story?
He hasn't seen the expense report yet.
There's a really convoluted answer to that. I'm just going to say I haven't seen it, so I don't know.
Keep going. And there's a bunch of other stuff that he's doing. He is building a new housing project because housing is a huge issue on the island. There's a bunch of stuff he wants to do, but there's nowhere for these construction workers to live. And then most recently, he's also building a Montessori school. And the big question is, whose kids are those for?
Well, I thought it was a really poignant part of the story when you included the question that one of the people you featured in the story asked about the research that they did with the Montessori school. Is there communication with the established school to make sure that the curriculum actually melds with when these kids graduate and go there? How does that speak to the way that what's happening on the island isn't perhaps necessarily organic?
Yeah, I mean, communication or lack thereof is the biggest concern among residents, even those who are more in favor of him. They just don't really know what's happening at any one time. So the rumor mill, or coconut wireless as it's called on the island.
Love that.
Are you kidding?
Yeah, is, people depend on it for their news. He owns the community newspaper now, too, so...
We didn't talk about some other exclusive reporting relating to Tom Cruise. What happened when Tom came to visit?
Yeah, so this was, it's a funny story because if you just bring up with anyone on the island, if you're like, do you remember when Tom Cruise visited? They're like, oh yeah, and he flipped his car and, it totaled it, crashed it.
Not his car.
Not his car, Larry's car. So back in 2013, when Tom Cruise visited the island, he was a guest of David Ellison, who Tom works with. It's Larry's son on their movies, including Top Gun, Maverick, the new blockbuster.
Heard of it?
When he came to visit, he was using one of Larry's cars, and he was on one of the dirt roads in Lanai, and he flipped it, totaled the car. And that kind of thing just is never reported anywhere because this is Larry's island, Yeah. They basically called his company and were like, come clean it up. Then they did.
He owned the tow truck.
Exactly. They smashed the car.
Which is why you've
and
never
they
heard about this.
recycled it. And then that's that. And no one ever hears of it again.
As I said at the top, so obsessed with this story. Check it out. It's a great read online, some interactive stuff going on. Sophie, thank you so much. Sophie Alexander, Wealth Team reporter, and of course, Jill Weber, the editor of Business Week.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I think what's funny, we didn't really get into some of the chat topics we had talked about earlier that we thought we might talk with our TV colleagues.
Hey, there's always 4 o'clock.
No, there is. But, you've got JP Morgan strategists saying equities are flashing a bullish signal.
And then Evercore ISI.
Right, saying, no, the S&P will sink another 30%. So
who's right?
Somebody's going to be right. It could be a mixture. We could get a rally, then a sell-off, a sell-off, then a rally. What?
A broken clock is right twice a day?
2 sides to every coin?
Yeah.
Opinions?
Yeah.
I'm not going to go there.
Don't go there.
I'm going to get in trouble. But off air.
But look, I mean, I think that's a story in and of itself, though, Carol, is the uncertainty around the direction here.
Nobody knows.
No one knows.
I mean, and the Fed, the ECB, they have some aggressive work to do. And I do agree with Caroline that so much of this is also the message. They don't want to taper tantrum. They want to make sure the markets know what's coming. And I think by talking up a big game, they get to see how it plays out in the financial markets. And people start to make decisions, and sentiment is impacted, investor as well as world sentiment.
That's exactly the point that I was trying to make, is the Fed has clearly telegraphed that there will be 50 basis point increase at the next meeting and then the following meeting after that. Those two things are given. The uncertainty is what happens after the July meeting.
They don't know. Nobody knows.
Exactly.
Right? The ECB is saying we're going to be pretty aggressive coming forward, but let's see how even these conversations about being aggressive and being, pretty hyped up when it comes to rates, how much of that starts to play out in the markets. Right? Look at I'm looking at the markets right now, taking another leg down.
And then what happens tomorrow? 8.3%?
I have no idea.
0.7% month over month.
Vin said if it's hot, market's going to freak out. If it's really light, maybe there'll be some easing.
Let's go to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Tonight, we'll finally see what the House Select Committee investigating the attack on the U.S. Capitol has learned. The committee is holding its first public hearing tonight on primetime television. Greg Valliere is the chief political analyst for AGF Securities. He says it's unclear how much of an impact this will have on the electorate.
This could have an impact on swing voters, moderate voters, but the Trump people are going to say it's all a witch hunt, it's all fake news. They will hit back pretty hard. The key is how dramatic will the testimony be? And it could be dramatic.
Greg Valliere with AGF Securities expects the hearings will likely harden opinions on both sides of the aisle. Well, President Biden says the private sector can help deliver real improvements in people's lives.
The private sector is able to move quickly, to mobilize vast amounts of investment capital, as are going to be needed to unlock the enormous potential for growth in this hemisphere and the region.
Biden was speaking to business leaders during the Summit of the Americas in Los Angeles. Well, during his trip to the West Coast, Biden has also appeared on the Jimmy Kimmel Show and was asked by Kimmel about his process for maintaining documents. A Digit reports that former President Trump flushed some of them down the toilet.
Just a process question. When you have sensitive documents that you need to flush down the toilet, do you do that? Is that done in your office toilet, or is that done in the bathroom, in the personal bathroom area?
I call Trump.
It was Biden's first appearance on a late-night show since taking office. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Do you know you can search for avocado prices on the Bloomberg?
Yeah, I did know that. These are what's the price right now?
Well, this is, I don't know if it's actual prices, but it's actual stories.
Is there a function where I can search for avocados and then get Chipotle delivered?
I think they call that
using my phone to do it.
Yeah, I think so.
Okay.
All right. So the story that's on the Bloomberg: avocado prices led inflation in Mexico last month, advancing at the fastest pace in over a year as higher fertilizer costs and supply chain disruptions continue to hit the fruit used for guacamole. Price of avocados. Let me say that 5 times fast. The price of avocados jumping
19% in May compared to the month before, and was responsible for 7 basis points of headline month-on-month inflation, above any other product, including fuels. Mexico's National Statistics Institute reported on Thursday. That's incredible.
Gosh, an index tracking avocados from the Mexican state of Michoacan, where most of the country's production comes from, is up almost 140% so far this year to 1,000 pesos. That works out to about $51 per 9-kilogram box. That's the highest in data going back to 1998.
Avocado prices have been, quote, exacerbated by supply-side factors, such as the increase in fertilizer prices. That's according to a Mexico City-based economist at BNP Paribas, Pamela Diaz-Lubey, Overall inflation in Latin America's second largest economy, it did slow slightly, Carol, to 7.65% annually from 7.68% in April. It did remain close to a 21-year high, while core inflation, of course, excluding volatile items like fuel, accelerated to 7.28%.
I'm curious, is that a line item in tomorrow's CPI print?
I don't know if avocados will be in ours, but I think that we will have a breakdown of, foods.
Yeah, no,
and
absolutely.
types of food as well.
Yeah, you can actually search on avocado toast, avocado imports, avocado prices.
All things that are higher.
Mission Produce, they are an avocado producer and distributor. Dow Jones story saw their stock up after second quarter revenue growth was also higher, and that was driven by a 44% increase in the average per unit avocado sales price. It's happening. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Lower stocks, higher rates, a stronger dollar, all the characteristics of tighter financial conditions. We've got about 43 minutes until the closing bell. Let's check in on the latest price action. Bill Maloney is at the Macro Squawk Desk. Hi, Bill.
And good afternoon, Doug. That's right. U.S. stocks under pressure today with the Dow currently down 375 points. S&P's dropped 60, while NASDAQ is lower by 224. The U.S. 10-year yield at 3.04%. Gold is down 4. Oil is in the red. And Bitcoin is trading lower by 0.3%. Among the main 11 S&P sectors, all were in the red, led by declines in tech, telecom, and the financials. And leaders to the upside in the Dow, only Home Depot and 3M, while Boeing fell 3% and led to the downside. After earnings, Signet Jewelers rose 9%. And in deal news, State Street said it is not pursuing a Credit Suisse deal, and Apollo is in talks to lend $2 billion for a potential Kohl's deal. In other news, U.S. household net worth fell $544 billion in Q1. And wrapping things up, DocuSign reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
Thanks, Bill. And if you have a Bloomberg terminal and you want to get live audio updates on it, the function is SQUA, then the green go key. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, in the next 30 minutes, we've got a double dose of what's going on in our economy. Let's get to the U.S. first, and then we'll get a bigger, broader outlook on a day when we, as we just talked around with our TV colleagues about the ECB weighing in. First up, though, Tim, a story that's among our most read on the Bloomberg.
I think it's the most read in the last 8 hours now.
Is it right now?
Yeah, I just checked.
I know it's been like moving up there. It's about how one day ahead of the CPI print in the United States, inflation is topping 10% on key items that Americans just cannot avoid. I mean, I don't know about you.
Yeah.
Food and gas.
If you're listening right now, you know exactly what we are talking about. Olivia Rockman is on the story. She's U.S. economy reporter for Bloomberg News. She's with us right now in the Bloomberg Interactive Brokers studios. So I read this story, and I thought, and I've said this throughout the program today, Olivia, this story has Carol's name written all over it because she thinks it's like a waste of time to strip out food and energy when it comes to inflation, because who's not using energy and who's not eating food?
For the longest time, economists were stripping this out because energy for a month at a time would be volatile, or food would randomly spike and then come back down because of hurricane or like just one-off things that would happen. But we're in this environment now where everything is spiking at the same time, and so to just say, oh, those are volatile and we're not going to look at them isn't working in this very pandemic inflationary environment.
The other thing is, we were talking before we got going, I mean, oil is in everything. Transportation, the moving around of the world, like, how do you get away from it? I said to you before we got going, every time I fill up my tank.
Where are you driving?
I fill up my tank.
How often? Where do you go?
I fill up my tank and I'm like, oh, but you know what? This doesn't cost me anything because it's not a part of the core. I mean, I don't know, but that credit card statement comes at the end of the month and it's there. Is there a rethink or dig a little bit more into your story and what you wanted to get to in reporting this out?
So a lot of this comes down to what the Fed is watching when they're setting policy. And for the longest time, the Fed really did only look at the core because they didn't have to worry about these categories. They would fluctuate, come back down. At this point, the Fed has no choice but to look at food, energy, and electricity and say, how is this impacting Americans? And are we going to take action on these categories that maybe before we would write off? And it does seem like, based on what we've heard from Powell, that they are looking at those categories more than they had ever in the past.
We spoke to Vince Signorella, global macro strategist here at Bloomberg News, a little earlier in the program. And he gave us his predictions for tomorrow. He's not looking at year over year. He's looking at month to month. And he says if we see a print that's too hot, the market is going to go crazy month to month because it's expecting 0.7%. If it sees something hotter than that, then that's going to be bad news. Talk to me about expectations. We have the Bloomberg economists, analysis and what we think it's going to be. What does your reporting tell you?
The economists that I've talked to this week have all said risks are to the upside on the print, both for month over month and year over year.
Wow.
That's on the headline figure, so that's the ones that include food, energy, and electricity. The core may actually cool because we may see apparel, furniture, kind of discretionary
low
things
inventories.
come down. Yeah, but the risks are to the upside because of what gas is doing. We have gas almost at $5 a gallon nationwide. You've got food spiking because of Ukraine, everything. So if anything, we might see something hotter, according to economists, and the cool-off doesn't look great.
And I guess, we've talked about this, Tim and I certainly have, and with our TV colleagues in our simulcast, just the broader impact that this is having on Americans, right? We've seen kind of these sobering stories of people making choices. I was actually checking out, we talked about this earlier, and I was buying a few things at the grocery store there. I was buying some paper towels, and it was so expensive. I'm like, I don't really need these right now. That's ridiculous. You do start to think, okay, I'll put this back, and you make some choices. And for some, the choices are really hard, especially low-income Americans.
Yeah, and we're almost going back to the K-shaped recovery that we had talked about so often in 2020.
We talk about it with Peter Atwater of William & Mary a lot, who coined that phrase.
Yeah, so you've got low-income consumers really feeling the pinch of this inflation because the majority of their spending is on these necessities versus higher-income Americans who also spend on discretionary categories. So real spending is actually pretty strong still. Will that fall? Potentially, but we do see the dichotomy.
The reason we do care about this too, and core, we could go on for this core versus non-core, but at some point, like we just said, you do make some choices, and we're so concerned right now. We saw it from the ECB and Christine Lagarde, right? We're worried about, okay, if people are having to make choices, where do they cut back, and how does that lead to an economic slowdown?
And that's just the question, right? Consumer spending in this current environment is, I think, what will be the straw to break the camel's back in terms of a recession. In the past, it's been financial conditions. Probably not now.
Right, because it's been so strong, right? And it's been going because of all the stimulus.
Some jarring figures in your piece, Olivia. Some 31% of households found it's somewhat or very difficult to pay for usual household expenses, according to the U.S. Census Bureau survey conducted in late April and early May. That compares to 25% at the same time last year. How much worse is it going to get?
We know that energy, food, and electricity are expected to continue to rise this summer, and that's at a time when people drive more in the summer, people need air conditioning in the summer, and so all predictions show that this summer could be probably the worst time of the environment that we're in. There are some predictions that things could get better in the fall, and the good news is we do still have a strong labor market. And so that's what we need to be watching really closely to have an understanding of where people are going to be, because if the labor market also weakens, we really are going to have trouble for some Americans.
Yeah, just understand, folks, that just because there's a core CPI, it's like, oh, okay, that doesn't impact me. I'm going to still go out and spend. It's just not real, and I think very, very timely in terms of the conversation. The Fed, though, pays attention to CPI, or is it really PCE?
So historically, PCE was their measure, but they have no choice but to look at all the measures given the tricky position
I don't
that they're
think
in.
Fed Chair Powell is taking the day off tomorrow, Carol.
You don't think
I don't know his schedule, but I don't think he's ignoring
it's
tomorrow.
It's media calling. They want to know, and they're like, no. It's PCE. I'm just trying to, Olivia, thank you.
Thank you.
Appreciate it. This is, our most read story on the Bloomberg. Olivia Rockman, U.S. economy reporter at Bloomberg News, about inflation topping 10% on those key items that I got to tell you, we just need.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week, and folks, we've just got less than a half an hour to go until the market close. Hey, coming up, we just talked about the U.S. economy. We talked about inflation. We are going to get a big macro picture of what's going on. We're going to do that with our own Tom Orlik, who is Bloomberg Economics chief economist. I'm looking forward to that.
Yeah, we're going to talk China, we're going to talk Europe, and more. First, though, let's get a check of the trading day. Here's Doug Krisner.
Hey, Tim, equity market is at the low point of the day. Information technology within the last half hour has created a lot of weakness here. The information tech group within the S&P is down about 2% right now. Bear in mind that we get that CPI report tomorrow morning. This is data for the month of May. We're expecting to see an increase at an annual rate of around 8.2%. If it's hot, if it's above that level, the risk is that we're going to see elevated yields across the curve, and maybe the market is preparing for the notion that we could see a spike in rates tomorrow. Already present concern over growth and stubbornly high inflation, particularly where energy is concerned. Dow Industrial Average is down 1.3% right now. The S&P weaker by nearly 1.7%, and the NASDAQ comp is off about 2% right now. We have shares in Disney moving lower. The company has fired Peter Rice, its most senior TV content executive. Disney shares weaker by more than 3%. And NXP Semiconductor saying demand is far in excess of supply for the company's automotive and industrial business. In a down tape, we have NXP Semi higher by more than 4.5%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. As we mentioned, we're going to continue on the economy. We're going to broaden it out to the global economy. We did have the ECB bringing down the curtain on years of ultra-loose monetary policy, committing to a quarter-point increase in interest rates next month and signaling a bigger hike in the fall. ECB concerned about high inflation, slowing growth, and Tim, safe to say that's the same story here in the United States. And then there's China seemingly backstopping that economy, but, you know, always hard to know if we're getting the true picture of what's going on there.
We've got a great voice to get a check-in on global growth. Tom Orlik is chief economist for Bloomberg Economics. He joins us on the phone from Washington, D.C. Tom, your latest note, slowdown, question mark? Yes. Recession, question mark? No. What do the data tell us about why you think that there's a slowdown but no recession?
So this is a very challenging moment for the global economy, Tim. And you put your finger on one of the biggest problems, inflation, pushing central banks from the Fed to the ECB into an accelerated tightening cycle. Of course, we've also got negative spillovers from China's COVID-0 policy, lockdowns perhaps being renewed now in Shanghai, and of course, from Russia's invasion of Ukraine. So there's a lot to worry about. At the same time, we've got to keep in mind that for the United States and for Europe, there's still a kind of reopening trajectory and a reopening momentum, which is providing a little bit of support for growth. And especially in the United States, we've also got consumers who are sitting on pretty fat bank balances in many cases from the COVID stimulus. So this is going to be a bumpy period. Some parts of the world are going to be turning down. We think there's a contraction in China in the second quarter, for example, because of their COVID-0 lockdowns. But the global picture, and certainly the picture here in the United States, we think is slower growth, bumpier growth, but we're not yet in recession territory.
Tom, you have seen lots of economic cycles, and I feel like this is one where we're kind of watching the disaster happen in front of us, but having said that, we also understand like what would fix it, right? In terms of the easing of supply chains, the ending of the war. You know, we're at this moment of pivoting towards cleaner fuels. And so there's a reluctance on the energy, traditional fossil fuel energy, community to commit new money to that existing infrastructure. Like, I feel like I look at it and I'm like, I know what's happening. I get it. And yet we know it's going to be uncomfortable for a while.
Yeah, I think that's exactly right, Carol. There are problems out there and there are fixes to those problems. But I think the challenge right now, and I think why many people have this kind of sense of a looming disaster that we can see but we can't fix, the challenge is that these are problems that you can't fix just by throwing money at, right? If we were worried about unemployment being too high, we could say, okay, fiscal stimulus, okay, cut interest rates, let's pump up growth again. But the problems of war in Ukraine, the problems of COVID-0 in China, the problems of broken supply chains, the problems with inadequate energy supply, yeah, there are solutions to these problems, but they're solutions which require global leaders to get together and agree a solution, or years of investments to get supply chains and energy supply back online.
This is not
easy fixes.
these, Tom, are not things that are solved by raising interest rates or, letting bonds roll off a balance sheet, right?
Well, exactly. So the challenge for central banks here is that they're combating inflation that comes from the supply side of the economy, right? Inflation is high because there's not enough stuff. There's not enough energy. There's not enough agricultural products. And that's pushing prices higher. Now, the tools which central banks have, they're not tools for managing supply. They're tools for managing demand.
Right.
And so what the central banks are going to do is they're going to raise interest rates. And yes, that's going to bring inflation down, but it's not going to bring inflation down because there's more oil supply or more agricultural supply. It's going to bring inflation down because there's less demand. And a sort of more direct way of saying that is because there's less jobs and there's higher unemployment.
Given the price, Tom, sorry to cut you off. We only have about a minute and a half left, and I want to make sure to get this in. Given the price of oil right now, are you concerned at all that it's sort of a harbinger to a recession, similar to what we've seen in past recessions with spikes in energy prices?
I mean, that is certainly the risk, Tim. So as oil prices go higher, that cuts into household spending. It cuts into their capacity to spend on other things. That slows the consumer engine, which is one of the main drivers of U.S. growth, and that's what brings a recession into view. At the same time, we have got households here in the U.S. still sitting on a bunch of savings they had from the COVID-era stimulus. Many people are seeing wages rising quickly as well. That's why for the U.S., we see a recession more as an end 2023 story, not so much as a 2022 story.
Well, it's interesting times, no doubt about it. Love checking into your research and getting your views. So, Tom, thank you so much. Tom Orlik, he is chief economist at Bloomberg Economics, joining us on the phone from Washington, D.C. We see this as we are counting down less than 24 hours, 8:30 tomorrow morning. Wall Street time, we'll get that CPI print. We'll also get a read at 10 a.m. Wall Street time on consumer sentiment. So we'll get an idea of how consumers are feeling about the outlook, which certainly when you feel a certain way, you're going to probably act a certain way. So it's really, really important.
Well, the sentiment clear on Wall Street right now with the NASDAQ underperforming, down more than 2%. The S&P 500 down close to 1.7%. The Dow down 1.3%.
You almost wonder, do investors know something about the prints tomorrow?
Because like Vince said, they were kind of like waiting for the prints tomorrow, but that's not obviously the case anymore.
Yeah, but are they expecting a hot number that's going to make maybe the Fed even more aggressive and central bankers more aggressive? Off to D.C. we go, off to Nancy Lyons and Roll the National News. Hey, Nance.
Thanks, Carol. The House committee that's been investigating what happened January 6th will be sharing its findings tonight on primetime television. Bloomberg Government's Jack Fitzpatrick says it is the first of many public hearings that'll be held.
The lawmakers on the panel are determined to kind of make their case to the American people that this was significant, that the lawmakers like Jamie Raskin on the panel have said this was not a spur of the moment thing. They're going to lay out the details of what they know about any level of prior coordination.
Bloomberg Government's Jack Fitzpatrick says the public will see video footage for the first time that was shot by a documentarian who spent time with the far-right group the Proud Boys prior to January 6th. A group of Senate Democrats is looking to make it easier for women in uniform to access abortions if the Supreme Court rolls back Roe v. Wade.
The group, led by New York Democrat Kirsten Gillibrand, is introducing a bill today that would scrap the law that prevents Defense Department funds from being used to perform the procedure. Doctors on military bases are already banned from performing abortions because they're federal employees. Without federal protections, female troops in states that limit abortion access would need a superior's permission for leave to travel out of state for the procedure if Roe v. Wade is overturned. In Washington, I'm Nathan Hager, Bloomberg Radio.
Military officials are now confirming 5 Marines are dead following the crash of an Osprey aircraft yesterday in a Southern California desert. The Osprey was based out of Marine Corps Air Station Camp Pendleton. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Can I just say what you just said, though, about Tom Orlick?
Yeah, sure. I would say it to his face.
And if you use the Mindspace app...
Is it Mindspace?
Come on,
I don't know
everybody.
what it's called. It's like
not
this
Calm,
app.
is
Calm.
it?
No, not Calm.
No, come on. I have it on my phone. Wait. I'm looking at it.
Okay, well, it's a meditation app.
Yeah. Which one is it?
I don't know.
Oh, darn it. Why can't I find it?
Headspace.
Headspace.
Thank you.
Thank you, Jared. Thank you. So
All right.
here's what we do, right? You said, like, the guy on it is Andy.
Andy.
He's a Brit.
Yeah.
And he just, like, you know, the world could be falling apart, and he talks to you, and you're like, I'm good.
Yeah, I want Tom to record
Tom
something
Orlick
for me
could
to,
do this.
help me get to sleep.
Tom, if that economics gig
You know,
doesn't
maybe
work
he
out.
could just record like optimistic things about the economy, and that's what keeps me up at night is the just stress about the global macro situation.
Rent prices are up.
Yeah, exactly. Hey,
Avocado prices are
let's
up.
talk about some of the drama brewing in Los Angeles, California, when it comes
What is
to
going on
Disney.
with Mickey Mouse?
Okay, so Chris Palmieri over in our LA bureau has a story about Disney's embattled chief Bob Chapek flexing his muscle with the firing of the TV chief. Chapek abruptly firing his head of television, Peter Rice, for not being a team player, triggering a rare public statement of support for the CEO from the entertainment giant's board of directors.
Yeah, so this is kind of interesting. Rice, 55, was chairman of General Entertainment Content, oversaw a vast swath of shows carried across Disney networks, including ABC and Disney Channel. He came to the company with the acquisition of 21st Century Fox Entertainment assets. That was in 2019. Once considered a possible CEO for the company. Alas, no more.
For now.
Why?
I don't know.
Why do you say for now?
No, it's true. I mean,
He's
this is
gone, right?
Yeah, he's gone. You're right. Disney chairman Susan Arnold said Chapek continues to have the backing of the board. Quote, the strength of the Walt Disney Company's business coming out of pandemic is a testament to Bob's leadership and vision for the company's future. We should note that shares of Disney are down significantly this year. Though we should note that it's faced a host of challenges, including challenges when it comes to the, what's going on at the parks, and also when it comes to entertainment consumption.
Yeah, it's kind of hard. There's a lot of moving parts. Stock's down 3%. And I meant to say thank you to Sebastian for talking to us about Headspace and filling it in for us.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Equity markets are lower. In fact, we are near the worst level of the day right now, with the S&P down about 2%, information technology leading the way lower, and that's helping to send the NASDAQ composite to a loss of around 2.4%. We've roughly got 12 minutes to go until the closing bell. No shortage of worry today on the street. We've got the issue of slower growth and stubbornly high inflation, complicated by the fact that what will the outlook be like as the Fed continues to tighten credit? Novavax right now leading a decline among vaccine makers. CNBC reporting earlier that the FDA decision on the Novavax shot could be delayed. We have Novavax shares being hard hit today, and shares in Moderna actually down just about 9%, leading the way lower for some of the vaccine makers. Today, the Fed told us U.S. household net worth fell by more than $500 billion in Q1. That was fueled by a sharp drop in stock holdings, something near $3 trillion. We've got that CPI data tomorrow morning. Special coverage for you here on Bloomberg Radio at 8:30 a.m. Wall Street time. A move up in yields across the U.S. Treasury curve today, a 10-year at 3.04%. The Dow is down 1.7%, and the NASDAQ comp weaker by 2.5%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The House committee investigating the January 6th attack on the U.S. Capitol plans to hold a series of televised hearings about its findings starting on Thursday night. Its members should focus on presenting the facts, not scoring political points. The facts, after all, speak for themselves. Rioters who breached the Capitol that day assaulted more than 100 police officers and caused more than $30 million in damages. Prosecutors have charged more than 800 defendants with crimes related to the attack, including counts of seditious conspiracy. With all this on record, the committee's goals should be straightforward: to lay out what it's learned and explain how to prevent a repeat attack. A sober, methodical presentation may not sway many votes, but it can still expose the causes of an assault on American democracy, and perhaps serve as a warning for other officials toying with insurrectionary ideas. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10.5 minutes left in today's trading session. Getting ready to soon wrap up this Thursday trading day. Man, Tim, we are near our lows of the session.
Let's get into it with Ryan Dietrich, Chief Market Strategist at LPL Financial. He joins us on the phone from Charlotte, North Carolina. Ryan, good to have you back with us. A really good day to have you with us as well, because you look at technicals. What are the technicals you're keeping an eye on? Is there anything to be optimistic about?
Yeah, Tim and Carol, thanks for having me back. You know, the truth is this, guys. We've had some oversold bounces, but we're not quite seeing historically what you tend to see at a major low, which is like, let's get a little geeky on you, like 90% up days, 90% up volume days. You tend to see clusters of those. We haven't quite seen those clusters yet. So we don't think it's the end of the world. We don't see a recession. We don't see major selling weakness from here. But is May 19th the lows? That's the big question, of course. And just think of this. It's a midterm year. We talked a lot about that. Midterm years historically don't find their ultimate bottom until about August 14th on average. Only twice in history has the low for the year taken place earlier than May 19th. Not saying it couldn't have happened, but just be aware that maybe a little summer bounce, but maybe a third quarter low is probably what we're likely going to see this year.
All right. When does a technical analyst like yourself just kind of say, oh, come on, this is an environment we really have never lived through before. I can't even look at history to figure out what's going to happen next.
Yeah, no, Carol, you're right. I mean, inflation, 40-year highs in inflation, the Fed, China shut down, coming off the heels of a 100-year pandemic, all those things, yes. But you know what we also started to see earlier this year? defensive things lead, like utilities, like healthcare, like staples, kind of hallmarks, or not necessarily a bear market, but just more of a risk-off scenario. So as long as we keep seeing that, it's just something to be aware of. Now, also, Carol, this was the fourth worst start to your
Wait. So what does it mean when
what
does it mean when defensive leads?
Yeah.
Remind us.
Simply that, when you see the more defensive things like your staples and your utilities leading, that's just the market's way of saying, listen, something could be a little off. Maybe let's be slightly more defensive here, as like we saw last year, right? When the tech leads and communications leads, that's more of a healthier market, really starting last November.
But was it healthy last year, or was it a case of so much liquidity in the system chasing the momentum players?
Well, it could be. Yeah, you're right. It could be a little bit of both. I guess the profits still count from that point of view. But you're right. It was healthy. But starting late last year, we started to see some things. Something as simple as an advanced decline line, just how many stocks going up versus down. That peaked late last year and started to weaken as well. So again, these are some cracks that were there. But I just want to point one positive thing. I don't want to sound too negative here. One positive thing. This is the fourth worst start to year ever for the S&P 500 as of the 100th day. All right, that just happened recently. The rest of the year, when you look at the 5 worst starts ever, the rest of the year is up about 19% on average for the S&P. So we've been here before. We've had rough starts before.
Right, say that again. Okay, wait. Fourth, Tim and I.
Five different things.
Tim and I. Okay, fourth worst start
Obviously,
to a year.
you're not a technical analyst, Carol.
I just don't type and write fast enough. Fourth worst start to a year for the S&P as of the 100th day, and then what usually happens? To talk to me.
Yeah, well, the rest of the year has been higher 5 of the last 5 times with the worst 5 starts ever. They were 32, 39, 40, 62, and 70. Those were the 5 worst starts ever as of the 100th day, and the rest of the year was higher every time, up 19% on average. So we've seen some bad starts. So we're this has been a rough year, no doubt, with bonds not participating and all the problems we've had. But still, we don't see a recession here, Carol. And historically, when you don't have a recession, you tend to bottom around 19 or 20%, right? 1976, 2011, 98, and 2018, all years without a recession with a 19% correction. We just corrected 19% on the S&P. So history don't repeat, but it rhymes, said Mark Twain. We think we're in the range where this is still an opportunity for investors when all is said and done with this year. Maybe we don't go back to positive, but we could be a good deal higher than where we are, in our opinion, right here with the equities.
All right, give us some other things to be optimistic about. Or actually, you know what? You just gave us some optimism. Talk about recessionary risks here. I know you said we don't see a recession. Why do you not see a recession?
Yeah, well, we see a slowdown here, Tim. I mean, like a lot of people, right? We came into this year saying 4% GDP growth. We're down to about 2.5%. The truth is we still think the consumer is pretty strong. And I know what Target has said and Walmart has said, but it's still in consumer confidence. I mean, the Michigan consumer confidence is near 11-year lows, but we're still seeing some pretty solid spending. I mean, I travel a good deal. I know you guys do. In fact, by the way, guys, I'll be in New York this Monday for the first time since the pandemic. So right away, things are starting to open up. And the truth is, everyone bought stuff, right? Goods inflation likely has already peaked, but it's the services inflation that might peak over the next month or so. And lots of the services are still strong in our opinion. And just one more positive thing, I think, look at backlogs, right? Some of the recent data we've seen in backlogs with supply chains, we've seen some big improvements. It's not perfect by any means, but again, that big CPI number, everyone's going to talk about it. We're optimistic that we're seeing some improvement in backlogs and time to delivery and some of those things that are saying, hey, it's light at the end of the tunnel, and inflation likely is going to peak quite soon. And that could be the positive driver for confidence the second half of this year.
All right, if your life depended on it, is the glass half full or the glass half empty when it comes to financial markets and the equity trade?
Well, by nature, I'm a glass half full type of person.
I knew that about you, Ryan. I was going to say there's no way he's going to go with glasses half empty.
But is that when you look at
anything's possible? No?
But when you look at the charts, you still feel that way. Skip the nature part.
Sure. Yeah, no, we do. I mean, listen, we knew this was a midterm year coming into the year. Your average midterm year pulls back 17%. After a 115% rally with only a 5% correction all last year, it made sense to us it wouldn't be as easy. We didn't see quite this much weakness, I'll be honest, this soon in the year. But the truth, again, is negative sentiment is all over the place. Everybody's worried, and that makes sense because of what's happened. But let's not forget, when everyone's on one side of the boat, the opportunity's on the other. So we do think that any good news at all, maybe it's on the economy, maybe it's on the Fed, we think it'll be the Fed. We don't think the Fed's going to hike 10, 11 times, maybe more like 7 or 8 this year. Inflation comes back down. That could be the positive catalyst. One more thing. Earnings expectations this year. Earnings are supposed to grow 10% this year. They grew 50% last year. All right, that's pretty good. I mean, that doesn't sound recessionary to us. We're still creating 300,000-400,000 jobs a month. Things aren't perfect, but again, we think we can avoid a recession, more of a slowdown, not a recession, and that could be an opportunity for investors here.
Well, to be fair, our Tom Orlick, head of our Bloomberg Economics chief economist, who's got research out, says slowdown, yes, recession, no. So I feel like it mirrors to some extent what you just had to say. Hey, Ryan, thank you so much. Safe travels to New York. Ryan Dietrich, chief market strategist at LPL Financial, on the phone from Charlotte, North Carolina. So optimism.
Yeah, of course. You can
Did
tell
you
he's
get
an
that note?
optimistic
Did you
guy.
get it down?
No, I did not. I'm going to let you say it.
I'm not sure if I've got it, so you're going to have to help correct
A
me.
lot of technicals there.
All right, time to head over to our Bloomberg TV team for Beyond the Bell. We do it on radio, TV, and YouTube. We're counting you down to the close on this Thursday.
Maybe. You guys are an optimistic bunch here. At least for today, though, the mood on the street, pretty much across the board, is somewhat pessimistic. Maybe that changes tomorrow at 8:30 a.m. Washington time when we get that CPI data. The Dow Jones Industrial Average, though, is going to finish the day down roughly 1.9% as we wait for these numbers to settle. The S&P 500 down about 2.4%, while the NASDAQ Composite is going to finish the day down by about 2.8%. And we should point out all the numbers you're seeing on your screen are pretty much the lows of the day. The Russell 2000 also at the lows of the day, right around 1850 and change, down right now, Carol, by 2.1%.
Yeah, Romaine, no place to really hide. We're going to get into the groups in just a moment, but if I look at the big picture, S&P 500, 481 names in the index lower today. Only 23, Taylor, finding some positive momentum.
Really broad-based on the individual sector level as well, and really sort of deteriorating in the final hour, maybe 2 hours here of this trading session. Hate to say it, but you take a look at, for the radio audience, the quote best performers, and it is all red all across the screen. The best performers are some of the food and staples, some of the food and beverage, even some of the autos, but those are still off about 1%, sometimes 1.5%. So really no safe haven here, at least on a sector level. I'll take you all the way down to the bottom of the screen, and this is where it's a classic risk off, Carol. It's semiconductors, it's media, it's technology, it's hardware. Those are off about 3%. I would note the banks are in there as well. You got a little bit of a flattening of that yield curve. Banks never really do well in that environment, so that sector also off about 3%.
Yeah, nobody wanting to take on any kind of risky trade today. All right, let's get to some specifics. I actually had to share a new group of names to our producer, Faith, because some of my gainers became decliners. But let's get to a name that Romaine talked about earlier in the chip sector. NXP Semiconductor holding on to about a 4% gain. It was up as much as almost 10% earlier in the session. A senior VP of the company at a B of A CMA conference, talking about demand far in excess of supply for both the automotive and the industrial business. He says that the company isn't seeing was up as much as 3.5% earlier in the day, still holding on to a gain of about 0.9% by the close. Also an outperformer in those major equity averages. Atlantic Equities weighing in, saying the company continues to deliver, quote, strong comp momentum, which should be enough to offset gross margin pressure. This is something very key for anybody in the retail business. And I do want to mention Signet Jewelers, owner of K Jewelers and Zales.
Yeah.
This one rallying about 9% in today's session, up after reporting earnings and sales that topped estimates and reaffirmed its full year guidance. Keep in mind, about 18% of the float is shorted, so maybe some short covering in today's session, Tim.
All right, you got the gainers, I got the decliners, Carol. By the way, Costco barely holding on to the green right there. Let's start with Apple. We saw shares of information technology and communication services really take a tumble today. Microsoft, Meta, NVIDIA, Alphabet, all moving lower. Shares of Apple down 3.6%, the worst performer in the S&P 500 on a points basis. Look, it just speaks to the selling today, but there was also a bit of news from KeyBank Capital Markets said that Apple could be seeing signs of weaker demand in the U.S. They cited an analysis of credit card spending data. KeyBank, though, wants to see the full quarter picture. The data suggests modest risk to its estimates, according to the firm. Royal Caribbean falling 8.3%. Travel stocks sinking today. We also saw Carnival down, Norwegian down, concerns about global growth, oil prices as well. And then Novavax dropping 17% to close at its lowest in more than 2 years. It led all of the vaccine stocks lower. This after a CNBC report said that the FDA's decision on its COVID shot could be delayed.
Meanwhile, we go across asset, and really today was a story of what happened in Europe. And I focus in on what's happening to the euro, currently off 0.9% against the US dollar. So clearly some weakness there versus a strengthening dollar as we think about ahead to a CPI, as we think about what the hawkishness is coming from the Federal Reserve. And indeed, well, actually some signs of hawkishness coming from Madame Lagarde. But is it too little, too late? We see more than 8% inflation over in Europe. And we do indeed, of course, see a Madame Lagarde talking about an end to, well, certainly that stimulus and the bond buying, and then also some of those negative rates. Could that happen as soon as July? I'm looking at overall the pressure coming from an inflation perspective. Nat gas up almost 3%. Those fires that Romain was talking about a little bit ago. Once again, the supply side that worry with gas. And lastly, I mean, I just want to focus in on what's happening in terms of sovereign bonds. The moves in Europe today were extraordinary. 22 basis point move on a 2-year in Italy. We're seeing Spanish 2-year yields pushing up 18 basis points. Portuguese, basically peripheral debt getting sold off hard as we start to see an end to the bond buying, the stimulus, the QE over in Europe, Taylor.
Yeah, and it's interesting. You had a sort of similar yield sell-off type of day here, Caroline, which is interesting given the magnitude and a little bit of that late day sell-off that we had within the equity markets. But bond yields still continue to climb higher pretty much all throughout the yield curve. But really the focus has been, Carol, on the front end as we really focus in on a Federal Reserve movement ahead of that big CPI data. You're up 4 basis points to a 282. That is now the highest that we've had since the end of 2018 on some of these bond yields.
All right, so how do we think about the inflation print and what might be the impact of the markets? If you think about all the strategists, right, we had a couple of stories that were on the Bloomberg. JP Morgan strategists say equities are flashing a bullish signal. And then you had over at ISI, Evercore ISI, one bear case saying that basically the S&P could go down 30%. I mean, it just feels like, you know, you're getting all different kinds of people weighing in because we don't really know.
Yeah, quite the range there, according to the bull and bear cases, right? And I think that speaks to the uncertainty around it. Speaking about uncertainty, we had a chat with Vince Signorella earlier in the day today, moving ahead to the CPI print that we have tomorrow. And he said the key number to keep an eye on is month-to-month change, not necessarily year-to-year. And he says if we get a hotter than expected number, than 0.7%, which is what we're expecting, then that's going to be ugly for the markets.
I do want to go back, though, to something that Caroline was talking about, and really kind of the global nature of this. I mean, I was just running the EMCX function on the Bloomberg terminal, and you sort of look at all the sort of CPI data across the globe, and I'm just kind of looking at the G20 nations just because it's easier to sort of filter through that. And it's just everything is basically 7, 8, 9%, and then obviously you have a few outliers like Turkey, Argentina, and Russia. But overall, you're talking about inflation rates that are running well above whatever the monetary policy target is supposed to be here. And the question is, what brings that down short of some major economic downturn that just completely saps demand?
Well, exactly. But this is where the push and the pull comes as well, whether we think of a recession or not. We're talking about the two binary outcomes being priced in the bond market at the moment as to whether or not we manage to avoid some sort of recession or whether indeed we go deep dive into it and whether that means you end up seeing yields come down or come up. But at the moment, it really feels like conviction can't quite work itself out either way. All we know, all that we can agree on, is perhaps central banks are behind the curve.
You've talked a lot about being behind the curve, and most of the strategists on this program have said that they have been, but at least as you were pointing out, Caroline, that the narrative has changed, at least verbally. They're trying to talk about being hawkishness, and verbally that's doing half of the work for this market.
Yeah.
Real yields though remain positive, but then starting to roll over. So I do wonder, when we think about these financial conditions and the market doing the work for it, we're not really quite there.
Not really quite. Yeah, you guys keep talking about glass half full. I mean, the question is what's actually in the glass? I mean, is it something good or is it something really bad here? Just real quickly, though, I mean, we're getting another slew of earnings here, including DocuSign, Stitch Fitch, Rent the Runway, and a few others. And this gets to the issue. DocuSign shares down 15%. And I'm looking at these numbers. On the whole, they're not bad. But when you look at what the company's saying with regards to future orders and future billings and things like that, this has now become the focus for investors right now. And they're just not really seeing that growth, at least the growth that they were accustomed to. And that maybe ends up playing a much bigger factor than what we see with regards to just economic data alone.
It's interesting because we're getting a different picture, and you know these are two completely different companies, but they do have to do with reopening. Rent the Runway shares are spiking in after hours, and look, the stock has absolutely gotten beat up, but we do get an idea of the way that people are going out and reopening and getting back out there. And the company saw its second quarter revenue forecast beat the average analyst estimate, coming in between $72 and $74 million, recently beating that estimate of 71.
Is that where you got that jacket from, Tim?
You know,
I saw you a little bit earlier in your other quick take.
I haven't checked lately.
You looked underdressed.
I haven't checked lately, but I don't think Rent the Runway
does men.
Does men, yeah.
No.
Yeah.
It's a unisex world right now, Tim. Come on.
You're right.
It's
true.
Future.
I think I could pull it off.
Yeah.
I have to say, though, Caroline, when we take a look at some of the revisions lower and some of the forward estimates, this certainly has been a huge quarter of just cutting the full year outlook. You've only had a few companies reaffirming or raising. This sort of seems like, at least, again, what we see versus what we do, and what we are seeing, certainly from some of these companies, is revising lower. Carol.
All right, we got to run. We will continue tomorrow, guys. That's going to do it for our cross-platform coverage. Radio, TV, YouTube, Beyond the Bell. We'll see you again. Same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Let's go to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The countdown is on toward tonight's first public hearing hosted by the House committee investigating the January 6th attack on the U.S. Capitol. Bloomberg's Washington correspondent Joe Matthews says new material is expected to be unveiled.
They have promised new information, new video evidence, and we do know that there will be witnesses who are brought forth as well. A Capitol Police officer who was there on January 6th, along with a documentarian who is embedded with the Proud Boys. They'll be speaking tonight. The hearing is scheduled for about 90 minutes, but it could go further.
Bloomberg Washington correspondent Joe Matthew. You can hear more from Joe on Bloomberg Sound On at 5 p.m. Wall Street time. A Republican candidate for Michigan governor and ardent defender of former President Trump is facing misdemeanor charges for his role in the riot at the Capitol. Ryan Kelly was arrested today in western Michigan and was released from custody. Also in Michigan, a police officer seen on cell phone video apparently shooting a black man in the back of his head has been charged with second-degree murder. The video from a bystander who was watching the traffic stop shows 26-year-old Patrick Leoya on the ground when he was killed. The FDA is expected to soon sign off on vaccines for kids under the age of 5, and White House COVID response coordinator Dr. Ashish Jha explains the timeline if that happens by next week.
We could see shots in arms of kids under 5 as early as the week of June 20th.
Dr. Jha says pediatricians and primary care doctors will be the main focus of distribution of about 10 million doses being made available. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, in our 99.1 newsroom in Washington, D.C. So wanted to get to this Business Week story on the terminal and at businessweek.com. It's about soaring oil prices, forcing President Biden to engage
Wait, oil prices are high?
Stop the presses. Okay. When campaigning for president, you might recall President, or then Joe Biden, former vice president at the time, vowing to turn Saudi Arabia into a pariah over the brutal killing of a newspaper columnist. You do remember, of course. And once in the White House, he temporarily froze weapons sales to the kingdom over its war in Yemen. He also outlined a vision to make the U.S. a renewable energy powerhouse, less reliant on an oil market where the Saudis hold so much sway. Fast forward.
As they say, that
today.
was then, this is now.
It's so true.
With Russia's invasion of Ukraine posing the biggest disruption to energy supplies in decades, Biden is having to take a different tack, recalibrating an alliance that is increasingly critical to the global economy and the most strained that it's been in years. With the oil market in turmoil, the world's biggest exporter of crude once again has the leverage to make demands. It's raking in $1 billion a day from oil, and Saudi Arabia's economy, alongside India's, is predicted to grow the fastest of any G20 nation.
And this is going to be tricky because what will be the Saudi agenda in all of this? And, this is why you go back a few years when we were, the fracking and all of the drilling that was going on in America, and we were, people were saying we were energy independent. Although, were we really? No. I know.
I'm shaking my head.
I know. But, so here we are. And so frenemies, enemies become allies again.
I just keep thinking how long the transition to renewables is taking.
Well, I get why it's difficult. I mean, because of the established infrastructure, but...
To what extent does this crisis speed things up? Are we going to look back as this being a pivotal moment where, okay, we knew that, by 2030 we had to be, done?
Oh, I think so. And I think if you watch what's happening in Europe, who are much more aggressive on all of this, right?
Yeah, we're going to talk about this with Andy Marsh, the CEO of Plug Power, in just a few minutes.
Yeah, because they just took some moves recently. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market tumbled today. We finished at the low point of the day, and it's really a number of concerns here playing out, not the least of which slower growth, possibly producing a profits recession, and then we have to deal with stubbornly high inflation, particularly when it comes to energy prices. If the Fed is successful in not sending the economy into a recession, what is the risk that we're going to be living in a stagflationary environment? If you look at the overall market today, information tech was hard hit, leading the S&P 500 to a loss of about 2.4%. NASDAQ comped down nearly 2.8% today, where the Dow is concerned, a loss of about 1.9%. Novavax led vaccine makers lower. CNBC reported the decision from the FDA on the COVID shot from Novavax could be delayed. Those shares were down 17% today, and in sympathy, Moderna shares off about 9.8%. Disney has fired Peter Rice as its most senior TV content executive. Disney shares today weaker by about 3.8%. So the Fed told us today U.S. household net worth fell by more than $500 billion in Q1. This was fueled by a near $3 trillion drop in stock holdings. So the question is there more to come? Well, the answer may depend on that inflation reading tomorrow. CPI data hits the tape at 8:30 a.m. Wall Street time. Special coverage for you here on Bloomberg Radio. I'm Doug Prisner, and that is your Bloomberg Business Flash.
Yeah, I kind of want to put my head in the sand when it comes to looking at those 401k statements at this point. Doug, thank you so much. Well, some news this week.
It doesn't matter until you retire, Carol.
Yeah,
okay?
all right, fine.
That's what I keep telling
myself. I don't know. It's still a loss. Capital preservation. Some news this week. Plug Power will open a hydrogen production plant at Europe's second largest seaport, the strategically located port of Antwerp-Bruges, as the continent turns to the climate-friendly fuel to replace Russian natural gas. We've got a perfect voice on this, and that is the CEO of the fuel cell company, Plug Power, Andy Marsh, joining us on the phone.
Andy Marsh is president and CEO of Plug Power. He joins us on the phone from Latham, New York. Andy, good to chat with you again. How are you?
Great talking to you, Tim. I'm doing fine.
Well, it's good to have you with us. I want to talk about the significant investment that you guys made in Europe. Why was now the right time to do this?
Tim, I'm well-funded. And, this energy transition's happening. And, first it was driven by CO2. Now it's being driven by national security. And the port of Antwerp-Bruges is perfect. It is the gateway to Central Europe, into Germany. It is a place that we can sell hydrogen today and replace natural gas hydrogen with hydrogen produced by wind power. In the North Sea, they're looking to put over 60 gigawatts of wind power. It's a perfect location. The location's 13% of Belgium's greenhouse gases. Lots of hydrogen's used today. We can substitute easy. And Europe is changing and moving rapidly to new energy sources.
Well, and this is what I care about, like the trends that we're seeing, the timelines. My understanding from the press release from your company, Andy, is that you guys will start construction of the plant. You're waiting, I guess, to complete the permitting process, anticipated in late 2023, so end of next year. Initial production of green hydrogen is expected in late 2024, and plant commissioning will be in 2025. So that's 3 years out, approximately, give or take a little bit, and in hopes that there are no delays in the process. So having said that, in terms of this tight energy, fossil fuel, traditional fuel that we are living in, that continues for some time, right? Just based on what you guys are doing in planning for the future, this market we're living in probably stays with us for some time.
Look, Carol, I think all of us are thinking about how, by the way, I think, let's be straightforward, the infrastructure and changing it will take time. But 3 years seems like a long time, and, I'll call it 2.5. But you have to start building now for the future, and how we are not dependent upon nations which aren't liberal democracies for our future energy needs, and how we can cooperate with Europe and other areas of the world that believe in fundamental freedom. I agree with you. Not going to be, I can't snap my fingers and build this plant tomorrow. I can start building lots of plants today, and we can help change that future world today.
And I'm not trying to be a naysayer. I'm just trying to be realistic because as we try to understand like this inflationary picture that has become so chronic, right, and not transitory, I think the world just is trying to figure out, so how long do we stay in this environment? And energy is such a big component to it.
Carol, I think there's lots of creative people. And I think that you'll see people buy more energy efficient vehicles. There'll be moves to electrification here. I think that there'll be greater focus on energy efficiency. There'll be greater focus on renewables. As you saw the president invoking the Defense Act for technologies like our technology this week. I think it's going to be a tough struggle the next year, but companies like Plug are going to come out of it, in a very strong position with a hydrogen network across the United States, a big footprint in Europe. And so, it may seem like a long time, but we can make this transition and we have to.
Andy, I want to talk a little bit about the environmental impact of hydrogen. And there was a story, Bloomberg Big Take, late last month, by David R. Baker. And it says that the miracle fuel hydrogen can actually make climate change worse because scientists are warning that hydrogen leaked into the atmosphere can contribute to climate change much like carbon. Depending on how it's made, distributed, and used, it could even make warming worse over the next few decades, even if carbon poses the biggest long-term threat. What are you doing at Plug Power to make sure that hydrogen is not escaping into the air?
I think there's two items. One is that, and I'm going to take a step back, and there are different points of views on that article. We're working very closely with UC Irvine to make sure that the science is right. And they've done work that goes back as far as 2003, and they probably are less concerned with those issues. That being said, I have two reasons to worry about that, to make sure from a design point of view that we don't leak hydrogen. That's lost money, for one. And the second one is, obviously, you don't want to cause more damage to the environment. I think the environmental impact is less than's been stated, but you have to be concerned about those things, especially in industries like hydrogen. But, that's really where our focus is. Work with some of the best universities in the country, work on our designs, make sure that every kilogram of hydrogen we produce actually goes into a productive piece of equipment. And so that's really our thoughts about that.
Well, I mean, you're building this, expansion in Europe's energy supply in the port of Antwerp-Bruges. You're building that from the ground up, right?
That is correct.
So what is the technology that you're using to make sure that none of this leaks into the atmosphere? Because as you said, it's not just bad for the environment, it's lost money. Like, what are you doing from a design standpoint to make sure that doesn't happen?
Tim, I guess it's not, and my engineers probably would say it's not different. It's good engineering. It's not good science. It's making sure that, that you're keeping pressures at the right level so it doesn't leak into the atmosphere. That's really kind of one of the key items you need to think about when you're creating hydrogen in liquid form. So there are methodologies that exist today that we incorporate in work we're doing today, which will prevent hydrogen from leaking.
So help me out, Andy. Like, I know it's been a tough market environment, certainly financial market environment. And if I look at your stock's down about 40% so far this year, there's about 11% of the float is being shorted at this point. Shares, I will put out though, are up more than 20% since a recent low, I think around May 11th or so. What can you tell us about your business globally, demand and growth of the top line? I am curious if people watching these geopolitical are all of a sudden calling you saying, we need to do something now. So give us some context, if you would.
I think that's really an interesting point. One, we expect to hit our numbers for this year, which is $925 million in revenue, almost doubling. We have closed over 1 gigawatt of orders for our electrolyzers already, which is more than we predicted for the year. I have spoken, for example, I was with Senator Manchin in West Virginia recently. You know, there are people who are driving the policy for hydrogen, not only here in the States, but around the world. So when I look at it, our business is very healthy. Thank goodness I don't have to go to the market for cash at this time. But we look at it. We have a very strong business plan. We're going to meet our numbers in 2022, and people want our product, and we see it in the backlog that's building for our company.
Who's ordering, though, when you look around the world? And I know you guys have looked to expand in Asia specifically, and I do wonder about, does it get tricky with China and all the tensions that are out there right now? And are you able to find all the products you need to do what you need to do?
I brought in, Carol, people from Tesla to run my supply chain and to run my manufacturing. I think Tesla, even though they're going through some challenges at the moment, was the one company that was able to survive COVID and make sure they had components to build products. We do feel confident we can do that, and we've been thinking about that. Because of the rapid growth, we were really making sure we had sufficient components. I think from an order point of view, we're not focused on China, and I've never been focused on China because for many of the geopolitical reasons that's going on now, as well as technology concerns. But we've done deals with the Roscom in Egypt to build one of the largest green fertilizer plants where green hydrogen is critical. We did a deal with H2 Energy to build a 1 gigawatt electrolyzer plant, a plant that's supported by Trafigura. So, you look at the folks that we're doing business with, they're in the energy sector. They're looking to make the transition, and quite honestly, the cost of green hydrogen today in Europe is when we start producing it is lower than natural gas produced hydrogen.
Andy, love talking with you. Got 20 seconds left. Recession or no recession when you look at the U.S. economy right now, just quickly.
No recession.
No recession. All right. Hey, Andy, thank you so much. Come back. Keep us informed with what you guys are doing. Andy Marsh, he is the president and CEO of the fuel cell company Plug Power, joining us on the phone from Latham, New York.
40% of Plug Power's revenue comes from Amazon, 30% from Walmart, 1.4% from Home Depot. So we've got a good idea of what retailers are thinking right now.
Yeah,
too.
they're helping to fuel, I think, something like 9,500 forklifts across Walmart's distribution centers.
Let's head now to Doug Krisner for a check of how the market's closed. Hey, Doug.
Hey, we were kind of weak today. We finished at session lows, Tim. A key concern, well, there are a few actually, but primarily whether or not slow growth in the economy is going to produce a profits recession. Then there's this issue of persistently high inflation, especially where energy prices are concerned. Dow Industrial Average losing 1.9% today. S&P 500 was down nearly 2.4%, and the NASDAQ comp weaker by nearly 2.8%. In a negative tape, NXP Semiconductors jumped 6%. This was after the company said demand is far in excess of supply for the company's automotive and industrial businesses. And at the same time, this is interesting, NXP is not seeing any sign of weak consumer demand. State Street is not pursuing any acquisition or business combination with Credit Suisse. Yesterday, we were talking about a Swiss financial blog report indicating that State Street could make a bid for the Zurich-based bank. State Street shares today were down about 1.3%. ADRs in Credit Suisse giving back 5% today. A little bit of a move up in U.S. interest rates across the Treasury curve. A 10-year last quoted in New York at a yield of 3.04%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right. Really appreciate that update. Doug Krisner there. Well, our next guest, this next guest, I feel like the world needs to just stop and take his advice.
Listen to Bo.
Exactly. He is a two-time world champion debater, former coach of the Australian national debating team and the Harvard College Debating Union. He's got a new book out.
Bo So is a journalist and an author. The book is called Good Arguments, How Debate Teaches Us to Listen and Be Heard. Bo joins us now via Zoom from Washington, D.C. Bo, I want to get to the book in just a second, but take us through your journey because it's really interesting. How did you become a two-time world champion for debating?
Well, thanks so much for having me on the program. I started debating because I moved as a kid from South Korea to Australia without speaking a word of English. And I quickly found that the hardest part of doing that was adjusting to real life conversation, where people can kind of mid-sentence change directions and spin you out. And the way I kind of got over the shyness and the conflict aversion I felt was by joining the debate team off the strength of a single promise from my elementary teacher, which was that when in debate, when one person speaks, no one else does. And to someone who had been used to being spoken over and interrupted and taken out of conversation, that seemed to me a kind of a life raft. And I've really been riding it ever since.
Man, it's just so relevant. It's such, we have producers who get in our ear like crosstalk, like let the person be heard. But there is a bigger message here, right? In terms of an environment that we sit in today where you can't have differing opinions. Nobody wants to hear it, and everybody just kind of shouts and yells at each other. How do you think about the world today and what ails us?
Well, we're living at a time of really extraordinary polarization, and it's easy in times like that to see disagreement as the source of our troubles. And what I'm trying to suggest with this book is disagreements can be a force for good, not only because they're useful in terms of finding out truths and ensuring people are heard and we can be honest and frank and forthright with each other, but more importantly because good arguments are what good democracies are, they're what good workplaces are, what good families are, that we, despite our differences, resolve to live together, and instead of ignoring our differences, to put them in conversation with one another with the hope that we might be able to get somewhere deeper, somewhere better, somewhere richer than we might be able to on our own. So my hope with this book is to restore people's confidence in what disagreements can do, and hopefully to give them a few skills that are going to allow them to handle them a little bit better too.
I think that one thing that keeps people back from expressing disagreement in the workplace is perhaps the way that we interpret how other people are going to take that disagreement, the idea of people taking conflict personally. So, Bo, what's a good way to, how should people express themselves in a way where they get to that better place by disagreeing with one another?
I think that's a really important question, and debate is such a big part of the workplace now, isn't it? Because the nature of modern white-collar work is just we sit around in meetings and disagree all day. And I think the book gives a few different pieces of advice for someone in that situation. I think the first is you want to be really clear what the disagreement is about, right? And to say we're just having a conversation about this hire or about this business plan, as opposed to all the other disagreements that we might have flying around. As soon as there's that kind of imprecision about what the conversation is about, it tends to become unruly and it tends to bring in personality. It tends to bring in all the things that has happened in the past. So the first thing I would say is every disagreement starts with an act of agreement, and that's often about what the discussion is about. The next thing that I would add is you want to have the kind of rules that we started our conversation with. So in competitive debate, you know that everybody gets equal time in which to speak. They're not interrupted while they're speaking, and they're given turns so that when I speak and I give you a chance to speak, there's no need for me to interrupt because I know I'm going to get a turn back. And restoring some of those basic rules, I think, can make many of those conversations go more productively.
Is a big part of this, too, is that there doesn't have to be a winner or loser in the conversation or in the debate?
Absolutely. And, one of the things that you learn as a competitive debater is wins and losses are temporary. Just the way it is in the workplace, you might take a W in this particular conversation or a loss in this particular conversation, but your coworkers aren't going anywhere, right? And so they're going to be back the next day or the next week, the next month with a different issue where you're going to be on different sides, sometimes allied, sometimes on opposing sides. So I think the real lesson, in addition to taking seriously the need sometimes to prevail in arguments and to stick up for yourself and to carry a message, is to recognize what we all need is a set of rules, a set of practices that allows us to keep the conversation going in the long term and for the betterment of our organizations and for the betterment of ourselves.
I have to, I think about presidential debates or political debates. Like, do you watch them and you say, well, this isn't a debate. This is just a show. No, seriously, right? Like, because people don't have a chance to kind of say things. There's constantly somebody jumping in, and that's not a debate, or is it?
I think that's exactly right. I don't think they are debates, and something isn't a debate just because it's called a debate or because two people are standing at an awkward distance from each other at different podiums, right? And I think often what happens in those debates is one or more of the participants turns what would otherwise be a debate into a kind of a brawl, right? Where it's a kind of a shouting match or a name-calling game. And it becomes really important in those moments to pause, as you said, at the top of the program, to identify what is happening, to name the kinds of tactics that are being used, whether it be name calling and something like that, and to say, is it a debate that we're having or is it something else? Because without that kind of a check, what begins as a debate can devolve into something worse. And we see that not only on the presidential stage, but we see that around the kitchen table with our families and our loved ones, and we see it at workplaces all the time.
We're going to continue the conversation. Bo, sit tight for a second. We've just got to do a little bit of news. I have to say, I love just reading some of the prep materials that, it was because as a shy kid, like this was giving, as he talked about, debate gave him a safe space where he could be heard. And I have to say, I'm one of 7 people who listen to our show or watch it know that. And I was a really extremely shy kid, probably hard to believe at this point, but
yeah, I don't believe
I
it.
was, and in college got into radio because it was an opportunity for my voice to be heard. Nobody could interrupt me. Yeah.
Until you met me, and then I can just interrupt you all the time.
You're very kind. You're actually very gracious.
We're going to get back with Boso, the author of Good Arguments, How Debate Teaches Us to Listen and Be Heard, in just a minute. First, though, we stick in Washington, D.C. for an update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. House Majority Leader Steny Hoyer says he hopes tonight's hearing into the January 6th attack on the U.S. Capitol will be a learning exercise for Americans.
I hope the American people take away from these hearings a sense that they need to protect our democracy and our Constitution by not allowing this kind of thing to happen ever again.
Congressman Hoyer of Maryland says the hearings will also help answer many questions, including what happened, why it happened, and who was involved. He says he has no doubt former President Trump was responsible for the events of that day. Well, House Minority Leader Kevin McCarthy has a different view of the committee's work.
Speaker Pelosi's Select Committee on January 6th is unlike any other committee in American history. In fact, it is the most political and least legitimate committee in American history.
McCarthy says the committee has permanently damaged the House and divided the country. A Republican candidate for Michigan Governor, Ryan Kelly, has been arrested and charged in connection with January 6th. The FBI says Kelly was arrested early today in western Michigan. He's been charged with committing violence against a person or property on restricted grounds, damaging federal property, and disorderly conduct. A Michigan police officer is being charged with murder in the death of a black man. Grand Rapids police officer Christopher Schur shot and killed Patrick Loyola during a traffic stop in April. Kent County prosecutor Chris Becker says he made the decision to charge Schur with second-degree murder. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic live in our Interactive Brokers studio. We are streaming on YouTube. Hey, how did this happen? Did we do 3 hours almost without talking about Elon Musk?
I think so.
How did that happen?
I don't know.
What's going on?
Must be living in the Twilight Zone.
It's bizarro world.
It is. So what's the latest?
All right, so Elon Musk bid for Twitter, which has been upended by the billionaire's threat to walk away, attracted a bevy of big-name backers and Silicon Valley mainstays. There were also, though, some notable exceptions.
Yeah, high on that list is a Dubai-based investment firm whose assets have surged to more than $5 billion under its secretive founder, Alexander Tomas. That's according to regulatory filings and people familiar with the matter. Vi Capital, whose main website consists of one page, there's no address, no contact details, has committed $700 million to finance Musk's bid for the social network, making it the third biggest outside equity investor in the deal. that's drawn money from billionaire Larry Ellison. We talked about him. It's today's big take. It's the cover of Bloomberg Business Week. Check it out. And Sequoia Capital, according to securities filings.
You know, in this era of wanting transparency, the ability of Vi to help finance one of the largest leveraged buyouts in history, if it goes ahead despite a dispute over fake accounts, we've been talking about that earlier in the week. It's noteworthy for a firm with few public records showing its funding sources or the nature of its investments. Vi, whose equity commitment to the $44 billion deal topped those by Brookfield Asset Management in Qatar, has also backed companies such as Musk's Boring Company and crypto exchange ErisX, according to PitchBook data.
Okay, let's talk about Alexander Tomas because he's got a history of connecting himself to big-name investors. Before setting up Vi, he worked closely with Russian-Israeli billionaire Yuri Milner, now appears to be cultivating links to Musk. He's also put money into Tesla's rocket company, I should say Musk's rocket company, SpaceX. Also the brain machine maker, also owned by Elon Musk, Neuralink. And according to LinkedIn, one of Vi's summer analysts is currently Benjamin Birchall. That's a son of Musk's key aide, Jared Birchall.
So a representative for Tomas declined to comment during a recent visit to the firm's office in Dubai. Only an assistant was present. She said the rest of the staff, about 10 in the Emirate, including Tomas, work remotely. So, this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, the issue of persistent inflation was very much top of mind for markets today. Session began with the European Central Bank signaling a quarter-point rate hike next month. That was pretty much expected. We know the ECB is moving to confront record price increases in the Eurozone. But the ECB also signaled a hike maybe larger than a quarter point as early as this fall. That seemed to get the market a little off guard. Tomorrow here in the U.S., importantly, we'll get data on retail inflation for May. Overall consumer price index is expected to rise at an annual rate of 8.2% from last year. So today, not surprising that we had a move up in yields across the Treasury curve. A 10-year last quoted up more than 2 basis points to 3.04%. Day of tough sledding for the equity market. We finished at session lows with the S&P down about 2.4% today. The Dow Industrial Average off by more than 1.9%, and the NASDAQ Composite coming in by nearly 2.8%. Novavax led a decline among vaccine makers. CNBC reported earlier the FDA could delay a decision on the COVID shot from Novavax. Its shares were down 17% today. In sympathy, Moderna off 9.8%. And Disney has fired Peter Rice, its most senior TV content executive. Disney shares today off 3.8%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. I want to get right back to Bo So. He's a journalist. He's an author. He's got a brand new book out. It came out this week. It's called Good Arguments, How Debate Teaches Us to Listen and Be Heard. He's got some great tips in here on how to not just be heard, but how to listen, because that's a really important part of any debate. Bo, Carol and I were talking about where we wanted to take this, and we both, said at the same time, social media is what we want to talk about, because, there's the idea of getting stuck in a canoe with somebody on Twitter, and you just can't get out of it. This idea of you get in an argument, you have anonymous people replying to you. How do you deal with this on social media? Do you just get off, you just ignore it and just close it up and say, I'm not even going to participate? Because that's what I feel like doing sometimes.
Yeah, I think the one thing about being a debater is it makes you very sensitive to the acoustics of the room that you're talking about and that you're talking in. And social media presents a lot of challenges in that regard, whereas in a kind of a face-to-face conversation, you're being heard equally. On social media, the most divisive content tends to be prioritized. Even though I'm debating you or talking with you, it's sometimes for the benefit of an audience, right? And it's actually kind of talking past you in that way. So I actually tend to think that social media, the way it's currently designed, is pretty inappropriate for the kind of debate that I'm advocating. And that in that regard, it may well be that social media has other contributions to make, whether it be finding out information, or it may actually be quite good at gathering like-minded communities, which it seems to do with extraordinary effectiveness. But I'm suggesting that there may be other better channels, such as face-to-face conversation and public discussions, to be able to have the kinds of disagreements that I'm advocating for.
You know what, Bo? What kind of ticks me off sometimes is when I'm having a discussion, we don't agree, and then the person just says, well, we're just going to have to agree to disagree, and then it's done. I'm like, well, wait a minute. Like, you just stopped the conversation. Like, that to me is not productive either. So help me, like, you have a chapter, How to Know When to Disagree. So help me here.
I agree with that completely, and it does feel like a kind of resignation, doesn't it? And a vote of no confidence, not only in oneself but in the other person, because it is kind of saying to you, I don't trust you to be able to handle this conversation very well. And I think the need for that declines the more of us and the more of our population develops the skills of good argument. But that's not to say that you should be arguing about everything under the sun either. And in the book, I provide a kind of a checklist. I call it the RISA checklist, where I encourage people to ask whether the disagreement in front of them is real, whether it's important enough, whether it's specific, so you're not talking about everything in one go, and whether the two sides are aligned in their objectives for having the discussion. And that's a kind of a way to stop us from jumping into a dispute out of defensiveness or pride, but rather to be a little bit more deliberate. But I share the concern exactly that that when they say, let's just agree to disagree, or even just sort of nod politely, and wear a smile that's not really a smile. It's a kind of a decision not to be involved with the other person, right? And to take a relationship further.
It feels dismissive.
Exactly. And it's the kind of standing at a distance, that I fear. Perhaps even worse than just outright conflict, because then you can see the differences between people, is when we have contempt for one another, when we stand at a distance from one another.
But what about when it comes to bad faith arguments? If somebody is making a bad faith argument, and I'm, thinking of Washington, D.C.
You mean lying?
Yeah, I'm really thinking of politics.
Yeah.
And
Well,
what we've
me
seen.
too.
Yeah, I know. I'm not even going to hide it. But what do you recommend to people who actually want to get something done in Washington? How should they be approaching these discussions, these arguments?
I think the first and most practical step that I recommend in the book is to understand the tactics of bad faith debaters. And one of them, as you say, is lying. And one thing about liars is they don't just lie once, they lie many times, right? In a deluge that kind of overwhelms you. And one of the things that debaters know to do is to pick a representative lie, to fit it in with other things that we know to be true, to show why it's inaccurate, and then to explain why that's kind of symptomatic of how that person is approaching the discussion. And again, to return to a point we made earlier, it's a way to pause and to say, this kind of tactic is unacceptable in the discussions that we're having. Of course, those tactics on their own are not going to be enough to deal with a lot of the problems of bad faith that we have, but they are individually empowering, and they are a way to restore the conditions of debate.
I think one challenge here, and again, I'm thinking about Washington, is a lot of these bad faith arguments happen when there's really no other side to debate that person, because everybody lives in their own universe these days. So you have, people go on primetime talk shows on certain networks, for example, and they're not challenged necessarily to a debate. They're kind of just allowed to say whatever they want. And then that clip goes viral, and they get their point across. And that's the world that we're living in. So how does somebody on the other side then, respond to something like that?
I think your diagnosis, I agree with completely, that misinformation, that extreme views flourish in situations where there's no person to challenge them, right? And where it's like-minded people egging each other on. So part of the argument that I'm making is there should be more debate day to day, right? And so I think we're often losing confidence in our ability to persuade other people, in our ability, even at Thanksgiving dinner, to challenge a relative to have a conversation about their beliefs, or to be able to do that in schools, in other settings. And I think that's...
Don't hate me because I'm interrupting you because we're running out of time.
Please.
But,
No.
But Tim and I are like kind of behind the scenes. It's like, the conversation made after right now for not banning guns, because people are saying, well, we didn't ban airplanes after 9/11.
Yeah, Steve Scalise said that.
Like, it's
yesterday.
ridiculous. But so how do you have an intelligent debate around that? And we've only got about 30 seconds left. We'll have you back at some
30
point.
seconds. I think the best thing you can do is to set a single topic, to say, here is the narrow issue within the broader universe of things we could be talking about, to take turns, right, to guarantee people an equal opportunity to speak, and to hold them accountable on what they say, and to pursue each idea fully rather than letting people slide across different positions.
So much fun, so engaging. What, Tim?
Who would have thought that a two-time world debate champion would be such a great guest on Bloomberg Business Week Radio?
Our producer, Paul Brennan.
Of course.
So great
Good
to
stuff.
have you here. Boso, thank you so much. Check out his book, Good Arguments, How Debate Teaches Us to Listen and Be Heard. Folks, this is what we need. Have a good and safe evening. I'm Carol Master along with Tim Stanovic. This is Bloomberg.
money and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
Checking San Francisco, and this is Bloomberg Technology. Coming up in the next hour, new information on Musk's big backers in his bid to take over Twitter. High on the list, a Dubai-based investment firm with a secretive founder. We will tell you what you need to know. Plus, I'm joined by Klarna CEO Sebastian Siemiatkowski. Is he worried about Apple moving into Klarna's buy now, pay later territory? And Arianna Huffington joins me to talk about how she got some of the biggest companies in the world to sign Thrive's mental health pledge, covering millions of workers. We're going to get to all of that in a moment, but first, let's get to the markets and a sell-off late in the day. Meta, Apple, and Amazon all ending the day down more than 3%. Bloomberg's Katie Greifeld joins us now with New York. Katie, what happened?
Well, Emily, like you said, it was another down day on Wall Street, led by some of those big tech giants. As a result, you saw the NASDAQ 100 fall almost 3%. The S&P 500, too, down 2.4% on this Thursday. Chinese tech, though, fared even worse. You had the Golden Dragon Index snapping a 3-day streak of gains, down almost 7%. All of this coming as Treasury yields continue to rise. You have the rate on 10-year Treasuries above 3%. Never really good news for equities. But Emily, it is June 9th, which means finally Meta Platform, it's finally switching its ticker from FB to Meta. And if we take a sort of retrospective look, this is a rebrand that has been met with little enthusiasm from investors. You can see Meta shares since that rebrand was announced all the way back in October. Shares are down 37% since then. Now, a lot of that decline came from that user growth stalling announcement that came earlier this year, but still not a lot of love for this hard pivot into the metaverse, I would call it. It was another bad day for Meta, also another bad day for a lot of those media companies out there. If you look at Netflix, Warner Brothers, Paramount Global, all in the red, and Disney too. I want to highlight Disney, down almost 4% today. That is a 5th straight day of losses. That's Disney's longest losing streak since November, Emily.
All right. Interesting. Katie, thank you. Well, a secretive $5 billion fund is helping Elon Musk's bid to buy Twitter. Vi Capital has committed $700 million to finance Musk's $44 billion deal. The firm is based in Dubai and was founded by Alexander Tomas, a German investor who previously worked with Russian billionaire Yuri Milner. Bloomberg's Kurt Wagner joins us to discuss. So tell us more about the significance, Kurt, of this fund's involvement.
Well, I think it just goes to show exactly how far-reaching Elon has had to go in order to get funding for this deal. It also kind of goes to show how international I think there is interest in Twitter right now, and mostly in funding a project that Elon Musk cares about, right? Vi has a history of kind of connecting itself with these big name tech backers like Elon. I think they're also in the Boring Company, which is Elon. They've done some investments in SpaceX before. So I just think there's, it kind of gives a bit of an international flair to this whole thing, but also just goes to show exactly how far Elon is having to go in order to find funding for this thing.
And they are the 3rd largest outside equity investor in the deal. So they're getting a big chunk of this deal. Talk to us about where the discussions between Musk and Twitter stand on bots. There's been a lot of back and forth.
Right. Yeah, so the latest this week was that Elon came forward. He formally filed a letter with the SEC saying, again, hey, I may walk away from this deal if I don't start getting information to prove that the bot number Twitter claims is the bot number is legit. And now what we heard from yesterday was that Twitter is going to give him access to the API, which is known colloquially as the fire hose of tweets, right? So every public tweet on Twitter is now going to be accessible to Elon and his team. They can do with that what they wish. I'm not exactly sure if that's going to answer the bot question for him, but it does show that they're trying to figure out a middle ground here where he can get the answers he needs and they can move this thing forward.
Meantime, we've also been covering another story. Meta had been working on a watch that we imagine would have been a competitor to the Apple Watch. They've now stopped those plans. What happened here?
Yeah, so they're still working on a smartwatch. I do want to be clear about that. But the one that we have been talking about and that you may have seen written up in the press is no longer going to be developed. And that one had 2 cameras. That was kind of what made it unique. It had a front-facing camera, but also a camera on the back. And you could take the watch off of the strap and kind of hold it up to take pictures. And what happened was that back camera that was against your wrist, that was interfering with the company's ability to use the watch as a controller, right? So one of the things they want to do with wrist wearables is they want to be able to determine when you're moving your hand or your fingers so that you can use that as a controller, for example, augmented reality glasses. And the camera was interfering there, so they're going to get rid of this prototype and they're going to do something else with the watch. But again, as you pointed out, this was kind of considered something that maybe they were doing to compete with the Apple Watch. So the fact that they're moving to something else obviously is notable.
All right, Bloomberg's Kurt Wagner, thank you for your reporting on this. Now back to that Musk Twitter deal. Another backer of that deal, of course, is Larry Ellison. The Oracle founder is the world's 11th richest person with a net worth of $88.9 billion. In 2012, he bought 98% of the Hawaiian island of Lanai for $300 million. That purchase came with 2 Four Seasons resorts, a significant chunk of its homes, and practically all of its commercial properties. Overnight, Ellison became almost everyone's boss, landlord, or both. In today's Big Take, Bloomberg's Sophie Alexander took a deep dive on the impact this has had on the people of Lanai. And Sophie, I'm from Hawaii. We call it Lanai there. Talk to us about the history of this island. I'm very familiar with it. How is it that one person was able to buy almost the entire island?
Yeah, it's unique because you think of billionaires buying private islands and it's not that big of a deal, but this one's different because it has 3,000 people who live there. So Lanai's history goes back into the 1800s when one person came over and started buying up chunks of the land and slowly accumulated pretty much the entire island, like 98% of it, and that passed from one family to another until in 1922, James Dole bought it, and he started turning it into the world's largest pineapple plantation, which it was for 7 decades. Then it passes to another billionaire, David Murdoch, who was chairman of Dole, and then in 2012, Larry Ellison bought it.
And of course, there are still thousands of regular people who live there. How exactly are they being impacted by Larry Ellison now owning it?
Yeah, this is interesting because, like I said, the people who live there and have lived there for generations are used to being under the control of a single company or a single person or family. But Larry Ellison is a whole different animal, as one person put it. You know, he's got $90 billion. That's a lot of money. I mean, it's nearly double what he had before the pandemic started. The last billionaire, David Murdoch, he only had like $2 billion. They call him the poor billionaire. So Larry can really do whatever he wants, and it's starting to show.
And what exactly is he doing? I mean, tell us. The stories in your article are just absolutely fascinating.
Right, so true billionaire form, you know, as soon as Larry gets there, he decides he doesn't like the food, so he builds one Nobu. Now there's another Sensei by Nobu. He renovates the 2 Four Seasons resorts, and so now they're fancier than ever for, you know, thousands of dollars, tens of thousands of dollars a night. And he's also doing things for the community, you know. He bought the grocery store and he renovated it, but that is the main concern, is that he's buying up a lot of the small businesses, he's buying up some more houses, and people are nervous.
So generally, are people, you know, you use the word nervous, they're not happy with this
I think
change,
it's more
even though they're getting a new grocery store, for example?
Sure. I mean, it depends who you ask, but I think it's more of an anxiety because the big problem is a lack of communication. People don't know what ultimately Larry's plans are, and so they just don't know what their future is going to look like here. And so more and more of them feel like there's not a place for them on the island. It's being catered to the uber wealthy, not for locals.
Well, and a lot of these people, you know, their livelihoods, they service the resorts, they work at these resorts. Is Larry Ellison spending a lot of time there personally? Do we know anything about his end game?
Yes, so he moved there during the pandemic, and that's been key because